Good morning, everybody. Welcome back to another episode of The Market Open. It is Thursday, August 22nd, 8:45 a.m., and we are here back once again on The Market Open. I am here on time. It's 8:45. Akshat says I'm late like the BLS, which is hilarious, but we are here. We are live. We've got a lot to talk about. We've got jobs data that came out 15 minutes ago. That's not bad. It's not incredible, but it's not bad, and markets are reacting positively to it. We've got to recap Snowflake earnings. That was last night. Snowflake right now down 10% in the pre-markets. We're going to see how Snowflake ends up opening. 10% is a lot. We'll see if it goes further down. I think there's a bull case for how it can be bought up, but I also think there's definitely a bear case for why it can continue selling off. So we'll talk about that. Nvda is at 130 again in the pre-markets. They got a couple upgrades today by a variety of Wall Street institutions. Just fell under 130 at 129.7, but up another 1%. And it seems like as we head into 828, the market is continuously bullish on the overall narrative that Nvidia has set for them. So we'll see what happens to Nvidia today. And then Palantir. Look, today is going to be, I think, a greenish day. I mean, there could obviously be a sell-off because yesterday was green when maybe it wasn't supposed to be green. We'll do a little recap of what happened yesterday. But Palantir at 32.60, nice momentum in the pre-market. A lot of stocks showing some decent momentum in the pre-market. S&P 500 at 561.62, so up about 20 bips in the pre-market. Palo Alto up a little bit. Tesla up about 0.5%. Robinhood 2025. Bitcoin as well. Bitcoin had a really good day yesterday. In the morning, it was almost at 62,000. Now it's at 60,853. But overall, a pretty bullish start to the pre-markets on Thursday. And that's likely because of what happened yesterday, which is what we're going to start off and recap to get into the market open. Benny, Noland, I'm Beneficial, Mickey, David, Peter, Midwest, Autumn Soul. Autumn Soul, your name is almost going to be true in like a month. We're going to be in autumn, and it's going to be really exciting. I love autumn. It's one of my favorite seasons. I am a little sad that every time I walk outside now, it's actually cold because I haven't felt this cold air in a while. But we're going to be in autumn soon. And honestly, dude, autumn really is my favorite time of the year. Fall, September through December, really October through December. That's like the best time of the year. Like if you can wear a hoodie outside and not have to wear a jacket, I think that's one of the best times of the year. So we will be in autumn soon. And that's another reason we're going to talk. That's another thing we're going to talk about today. We have 9 days left until August ends. And so I'm kind of curious, how does August end? We're going to look at some stats around September. September tends not to be the best. And so although we've had a good August, there is a way we avoid a crappy 4% down September, but the past 4 Septembers have been down almost 4 to 5% each. So it's going to take some creative stuff to get out of that hole going into September. But we'll see how it ends up playing out. Nolan, good morning. Good morning. Andres, Dung, Mark Cares. What's up? What's up? Ryan, Danielle. Thank you, everybody, for being here. All right. So let's get into discussion about what happened yesterday. All right. So yesterday was one of the most interesting days ever. It was one of the most emotional days ever in the stock market, or at least in 2024, primarily because of what happened with the jobs data. So if you were on the stream yesterday, we were looking for the jobs data coming in at 10 a.m., came in at 10:45. So for about 45 minutes, we were waiting to see this jobs data. And it was hilarious because no one had the data. So all of us were kind of just like waiting to see what would be the data. How would it come out? Would it be good? Would it be bad? The stock market was going up and down on this. And like just no one knew. So everyone was trying to figure this stuff out. And then finally at 10:45, the data came out. And it wasn't the best. We lost 818,000 jobs. Obviously, 818,000 jobs is not good. However, the market did not care. And we talked about yesterday why the market didn't care. The primary reason was because the market was expecting 1 million jobs. So if you lose 818,000, it was priced in. And I didn't really consider the fact that that would be priced in, but that was priced in. Another reason is that it didn't significantly increase the unemployment rate. If it did increase the unemployment rate, the market really didn't care. And then finally, it only bolstered the point for a rate cut. So again, although we lost a lot of jobs, this is what I think the bears didn't really understand about the significance of the job loss. It would make a labor cut. It would make a rate cut more likely because of a deteriorating labor market, or at least a labor market that looks like it's going to deteriorate if we don't do something about it. So when you put all those factors together, along with the fact that Walmart, Lowe's, Costco, Target said, hey, the consumer is not in a bad situation, the market really didn't have a gigantic reason to say, yeah, this is so bad that we're going to actually sell our equities and we're going to hide in cash until we get better data, because the data isn't as bad as what the market thought it was going to be. And then 3 hours later, so the market rallies on that. We get to 561.23 on the day. And I think we had 562 at the top. After that, we get the Fed FOMC minutes, and the Fed FOMC minutes were incredible because we had some Fed members that said in those minutes they supported a rate cut of 25 bips in July. So you've already got some of the 12 presidents that are coming to the conclusion that the labor market is starting to weaken, that consumer delinquencies are going up, and consumer credit is building. And so it doesn't make any sense to have monetary policy as restrictive as it currently is, almost double the Fed funds rate. And so, or the Fed funds rate being almost double the level of CPI. And so it got to this point where the market yesterday, it really didn't have a reason to get upset about anything. And most people thought that the market would get upset uniquely about the FOMC minutes being too hawkish. Those were bullish. S&P maybe touching 562 right now in the pre-market, or the job revisions being bad because we lost 1 million jobs. There you go. We got 562, and the market didn't care about that. Then, so that's what happened yesterday, and it led to an overall bullish Wednesday. Today, we got initial jobless claims, and those initial jobless claims also came in line with expectations. The market expected us to lose 232,000 jobs. We lost 232,000 jobs. Now, last week, we lost, I think, 7,000 below expectations, so that's good because it shows that, like, we're not losing as many jobs as we thought. This week, we matched. Next week, if we supersede the expectations, that's going to be bad. You never want to supersede the expectations, and a couple of those in September could give us that 4 or 5% down month. That is possible. But again, every time the market has to factor in that jobless claims are more than expected or even come in within expectations, they have to remember a rate cut is on the way, or a rate cut becomes more likely. And I'm not saying a rate cut is going to happen and then everything is amazing. I'm just saying that there is a period of time, there is this Goldilocks zone thesis we've been talking about, where you're going to have rate cuts, you're going to have GDP growth still above 2%, you're going to have inflation getting closer to 2.5%. And all three of those things, along with decent earnings growth, will create a melt up towards the end of the year and a bull market. 2025, we'll see what happens, but at least in 2024, that is my thesis for what we have going on right now. And it seems like that's not going to be too bad. So overall, pretty good macro understanding of, or pretty good macro take for what the market wanted to see. I think if we lost 1 to 1.3 million jobs, then it would have been worse. But at this point, if 818,000 jobs can't tank the market, if matching expectations can't match the market on jobless claims, if Fed minutes can't tank the market, like, I just don't know what is out there that's necessarily going to tank the market. Maybe it's seasonal. Maybe September is going to be the month where that just tanks the market because people want to take profits. One argument people were making that I think is fair is that a lot of people are not in the markets right now in August. A lot of people are on vacation. They're not actively trading. So there's not as much liquidity as there should be in the markets. However, which means that once they come back into the markets, there's going to be a lot more sell side pressure. One kickback against that is that the Max 7 is up 1.7 trillion in the past 3 weeks. The S&P 500 is up 3.7 trillion. So to say there's not a lot of money because it's August and that people are on vacation, that's like a fair argument, but there's definitely enough money coming from somewhere, whether it's retail or institutional, whatever it may be, maybe from money markets, even though the past 2 weeks we've seen money go into money markets. Today we'll get data to see if it comes out a little bit. That's fueling the markets. You know, that's allowing capital to come in. Now, again, 1.6 trillion did not literally come into the markets, but multiples expanded. The valuations have superseded 1.6 trillion for the Max 7 in the past 2 weeks. So you needed people to buy those stocks in order for those multiples to expand. And it kind of feels like there was some money coming in, even if it wasn't everyone who used to be in the markets over the past couple months. Let's get Tom Lee's take on what's going on. Tom Lee's still bullish. He thinks that things are going to be all right. Here's his perspective today from this morning on CNBC.
It'd be a good day for Tom Lee to be here. Joining us now is the aforementioned Tom Lee, managing partner of head of research at Fundstrat Global Advisors, as well as a CNBC contributor. A month ago, when the VIX hit 50 and there were growth fears about the economy, did you ever waver? Did you have any nights where you didn't sleep as well?
There were 3 days of horror, as the market post FOMC all the way to that Tokyo Black Monday. It was gut wrenching.
Was it for you?
Yeah. Yes. But we viewed this ultimately as being a growth scare, because we didn't think the U.S. was entering recession, which a lot of people thought after that jobs report. And I think people thought there was systematic risk because of what's going on with the yen. But markets showed a lot of resilience since then. I mean, the fact that we snapped back so sharply is showing you how strong this market is.
Still.
Yes.
The revisions yesterday, not on your radar. Should they be on investors' radar screen? I thought it might be a good thing if the job market was not as hot as people thought.
Yes, I think it is incrementally important because the FOMC minutes that came out yesterday as well showed the Fed staff saying this is a strong labor market. Well, that jobs report that came out Friday and the revisions that just came out show a lot of jobs disappeared. It's not as strong a market. And I think it gives more ammunition for the Fed to start a cutting cycle. And that's going to give a lot of life to the economy.
And to the markets.
And to the markets, especially cyclical stocks and small cap stocks.
Tech's already done well. So normally you'd think lower multiples could expect, or at least multiples don't need to stay where they are or contract with the high multiple tech stock. So they could at least feel better about the valuations if rates came down.
Yes, that's right. I think tech is still in a good place because of AI, and Nvda should reinforce that. And it's not a demanding multiple. Nvidia is maybe 28 times forward earnings, which is for the best, one of the most important companies in the world. It's not a high multiple. So if tech is in a good place and then we get Fed cuts, I think it allows the overall market to expand.
Do we see an orderly easing cycle because the Fed doesn't feel like it needs to act intra? They have a meeting where they go 50 or whatever. You think they just 25 and then the next meeting 25? So only do 50 this year and then maybe continue next year? You think it'll be like that?
I think that a soft landing is, the probabilities are going up, and that's why this should be a benign cutting cycle, like good for markets. But I think the key is the Fed getting off data dependence, because data dependence is the reason they missed the inflation turn, and I think now they're missing the soft landing.
Rear view mirror. But is it possible that they're too restrictive right now, and that the lag isn't? We don't know how powerful the lag effect of the higher rates could be, and they end up doing 50 or doing a couple of 50s. Is that possible?
I think futures markets are showing more than 2 cuts. So I think the Fed probably is a little behind the curve, and we know there is a recession in housing and durables and auto sales. So there was a lot of pain out there. So cutting more aggressively would actually make sense, at least from the market's perspective.
Where do you think?
So again, most of us understand the core Tom Lee thesis. At the end of the day, you can't, whether you agree or disagree, there is consistency to his point. And his core consistency is that a rate cut will be important for broadening out the rally. Broadening out the rally is going to be important for the broader market to not be so top heavy in the Mag 7. Still bullish on Nvidia as well. Thinks Nvidia can crush it. I mean, I kind of agree with it. I don't know if IWM hits 300 and goes up 40%. But I do think that multiple expansion on the Mag 7 is going to be minimal compared to the rest of the market, simply because it's already expanded so much. Again, Meta going from like 250 to 500 in the same year. But I do think a lot of them still have room to run. And we're going to talk about the Mag 7. There is one bearish thing I've been thinking about for the past couple of weeks around how Q3 results will go. Microsoft had some news yesterday, and I don't know if people saw that news because it was kind of under the radar. I don't know if it even matters so much. When I saw the news, I was like, oh, this is horrible. But like the market didn't care. Is Microsoft up right now? Let's see. And so we'll talk about that news as well, because I thought that was interesting. Microsoft is flat on the day. I wonder if the market actually cares about that, but so far the market's not caring too much. At the end of the day, rate cuts are important, and they should help broaden out this rally, which is what Tom Lee's entire thesis has been. Some breaking news, folks. Just found this out right now. I was going to talk about Palantir a little bit later, but let's talk about them right now. Palantir has just made a hire, and they have officially hired Mike Gallagher, who is a former, he was a politician. This is his first defense job. He was a member of the House of Representatives representing Wisconsin's 8th congressional district for the Republican Party between 2017 and 2024. So he was in Congress for 7 years. He's 40 years old. He's a Republican, and this is his first, defense consulting job. So there you go. And he is indeed a China hawk. This is probably why they hired him. This is not a guy he's not fond of China. Let's just say that. He's not a guy who likes China. Let's go to the article right here and let's get into this right now. This is interesting. I'll do a deeper dive on Daily Palantir today because I got to read up on this guy. I know a little bit about him, but not enough to really analyze it deep. But let's see what the article says right now. Why it matters. Gallagher is an outspoken critic of China, and he will reinforce the company's pick-a-side mentality. It's Gallagher's first job in the defense sector. He succeeds Doug Philippone, who built the unit and will stay on as an advisor. Word of his hiring circulated first earlier this year, but the company did not confirm until now. He began in June. In Palantir, you have a rare leading technology company that is unapologetic in its defense of the West and its belief that America is a force for good in this world and worth defending against our enemies, Gallagher tells Axios, adding that the private sector innovation can help prevent World War III. We need to marry both tech and hardware, bits and bending metal. Wow. So pretty much echoing Karp's statements. Karp, who's known Gallagher for years, recently told the New York Times that the U.S. will likely fight a sprawling war with China, Russia, and Iran. That scaring the crap out of your advocacies is the right move. I like it. I don't know much about this guy, but I like it so far, just knowing that he's against China and he is at least sort of unilateral in terms of his support of Western values. This is the type of people you need working at Palantir. These are the types of people you need working for the defense space. The obvious reason why this is good for investors is that investors need someone who is connected to the political landscape. So Palantir, remember they introduced that federal advisory board back in 2022? I don't even know if that's still active right now, but the whole point of that, from my understanding, was to lobby politicians essentially and get deals done, right? And every big tech company has to do it. When you've got someone who used to be in the House of Representatives for 7 years, he has connections. He understands the political world. If Palantir is bidding for a contract that they need to get, he knows people that he can probably talk to hopefully get the deal done. These are the types of people you want as strategic hires. And whatever they're paying him, if he can land us more deals, I'm sure he's going to be worth a lot more over the long term. He was on CNBC this morning. All right, so let's pull him up. This is why I pay $72 a month for CNBC TV. That's a lot of money, bro. Is that for YouTube TV? $72 a month, dude, for live TV. Like I don't even know who watches live TV anymore, but do I have it? Oh, no, shit. I don't have it. See, oh, no, do I have it right here? Today's August 20th. See, this is the problem with CNBC, dude. This is the problem with YouTube TV. See, look at this right here. Let me show you guys. I want it. He was on Squawk in the Box, right? So this is YouTube TV. If I want to, I can't find Squawk in the Box because it just ended 2 minutes ago. You know how they have Squawk on the Street now? So I can't click it so we can start watching, or I can't click the old episode because it look, the last one is August 21st. They're not showing me the latest one. That's ridiculous, dude. It just ended. So let me be able to go back to it. Okay. So I can't pull it up right now. We'll see if it pops up on YouTube in a little bit, but we'll watch what he had to say on the interview. I'm sure he pretty much echoed pretty much everything he said in this Axios piece. I'll put the link in the chat for those that want to read it. We'll probably get the video on it soon, and then I'll pull it up. But it makes sense. It makes sense. We need more people working on the defense side. Remember, the government business has started to reaccelerate. So if we're paying this guy $1 million and he can start getting us deals that are closer to 100, 200 million in different sectors, specifically around, what if the United States pulls out a deal that says, hey, we're paying $1 billion to develop an AI defense system specifically to go against China? Who's going to get that? What software company should be getting it? It should be a company like Palantir. And you need someone who's a China hawk like Mike Gallagher to be able to advocate on top of their behalf. Is the clip on X? Let me see. Well, let me just put his name in there, see if we pull it up. That is annoying though, right? The show just ended. It should be on replay inside of YouTube TV, and then it's just not there. And then you just don't have access to it. And I'm like, okay, this is just dumb. Oh, it's there. Okay, cool. We got it. All right. So let's watch this for a little bit. Then we'll get into Snowflake. We'll transition into Snowflake. But here it is for those that are just joining. Mike Gallagher joins Palantir today.
Gallagher, who left the House back in April, joining Palantir to lead the company's defense business. Mike joins us now from Wisconsin. First, right here on Squawk Box. Good morning to you. I can't.
I've never heard him speak. For those that haven't heard him before, maybe you guys have heard him. Let me know your first impression in the chat, and I'll give you my first impression. But this is really my first time listening to the guy and seeing how he talks at all.
I can't call you congressman anymore, but I can ask you why you decided to take this job.
Well, I've dedicated my life to defending the country, first in the Marine Corps and then in Congress. My mission is to prevent World War III, as we've talked about before. With Palantir, I have an opportunity to continue that mission in the private sector. We have war in the Middle East. We have war in Europe. We have a Cold War in the Indo-Pacific that risks turning hot if we don't get our act together and get off this path of complacency. And I firmly believe that Palantir is at the leading edge of deterrence in the 21st century, the era of software-defined warfare, where on the modern battlefield, countries that don't leverage advanced algorithmic warfare systems are simply unilaterally disarming. I would further say that in communities like mine, a manufacturing community in Northeast Wisconsin, Palantir is at the leading edge of revitalizing America's industrial base. And finally, I would say as we've talked about multiple times, in chairing the Select Committee on China, I came to realize that the true divide on national security is not really between Republicans and Democrats, but rather between Wall Street / corporate America and normal America. And too often, corporate America was simply unwilling to defend American values from Chinese Communist Party.
I like this guy, dude. I fuck it. For his first live interview, he says, fuck the corporations that don't actually take a stance on like real issues, especially going against the CCP. I like him. I like, he's not afraid. He's not sugarcoating it. He's not afraid. He has a stance. He's giving it out in the open, and he's saying what he wants to say.
Aggression and transnational repression. But with Palantir, you have a company that is unapologetic in its defense of the West and its belief that the free world is a good thing and worth fighting for. I think it shows that you can succeed without selling your soul in the process.
Mike, well, let me ask you two questions. One is, you were the House Select Committee chair on competition with China, and there were a lot of lessons that came out of that. Do you have more hope or less? And did you think you had the power to change things there, or did you decide ultimately that there was no power to do that in that role?
No, I felt like I had the best job in Congress, and we got a ton done. In fact, the last bill I got passed, I think, was one of the most consequential of the 118th Congress, the TikTok bill. And really, I was revitalized in my belief that Republicans and Democrats can work together to get big things done. I think the challenge we face is that we have an adversary, which is not just a military threat, it's also an economic and technological and ideological threat. So we're having to flex a lot of muscles we haven't flexed in a long time. And we have too many people that are unwilling to even utter the words new Cold War for fear that some sort of Voldemort phenomenon will take place and suddenly we'll summon some evil powers. We just need to get the energy and alacrity and creativity and wage that Cold War with that same energy we would wage an actual hot war. And that's the business we need to be in, preventing war. And too often, I think China has lulled us into a false sense of security.
Now, here's the thing, right? So this is what I think people misconstrue about Palantir and the defense industrial complex. A lot of people think, oh, Palantir wants a war to happen, and that's good for them. That's not the argument that I hear Palantir make, or I hear people like him make. Their argument is, how do we prevent a war? Like, no one wants a war, so how do we prevent it? And the only way to prevent it is to have defense. At the end of the day, like, if you don't understand that, I feel like you're stuck in a teenager mentality, because war is brutal and ruthless. And the only way to stop it is to make sure that people are so scared of you, that China is so fucking scared of even thinking of invading Taiwan, that they won't try. And because of the difference in values that we have, China, Russia, they start to go off the edge. And so unless you have a really strong defense system with companies, not like Google, that won't defend the United States in 2019 and give the Project Maven contract to Palantir, and that Eric Schmidt, the former CEO, called them out on because they have no backbone, but yet they're working in China to make different AI labs, but they won't defend the United States. You need companies that take a stance like Palantir. As Sanjay says, Palantir's mission is deterrence, not war. And it seems like Mike Gallagher is pretty much aligned on those values.
So one of the things you just said before was this idea that you think corporate America has actually played a role in preventing, frankly, the U.S. government from doing more as it relates to China. Palantir has been very outspoken on these issues. Having said that, Palantir does lots of business with corporate America today.
Yeah, I think Palantir is showing the way forward, which is that it's going to be increasingly difficult for companies to maintain their manufacturing presence in China. And I think increasingly what we see is that Xi Jinping is expediting his plan to decouple from the West. So what is the solution? We all need to work together. We can't just demonize big tech. I can't just sit here and demonize corporate America. We have to lay out an affirmative, positive path where we, working together with our closest allies, the Aussies, the Brits, key countries in the Indo-Pacific, pool our technological resources, our human resources to outcompete and win this competition and prevent war in the process. I think that's the path forward. Again, I think Palantir is playing a key role. And I think we need to revitalize our entire defense industrial base and make it easier for new companies to get into that space and cross the valley of death. Palantir is one of the few who's actually done it successfully and broken through the DoD status quo mindset and the bureaucracy that oftentimes makes it too difficult to do business.
The argument he's making there, I think, is very important, right? So corporate America has this sort of ideological agenda in terms of how they think of business, and then how they think of their exporting their values. A lot of that goes to shit overnight when Russia invades Ukraine, and a lot of your supply chain ends up being in Ukraine, right? Like, how do you navigate that situation? And so I think Palantir's argument to corporations is not only do you need to have an ontology with your data that is able to flip things up overnight if something chaotic happens, but also you need to be questioning how you're processing a lot of the very essence of your manufacturing, for example, in places that don't agree with your values in the first place. And this is someone who seems to be echoing those statements, who can actually talk to corporations and then obviously government officials to make them think differently about those unique issues.
Wanted to ask you actually about TikTok, ByteDance, and the bill that you helped pass, which pushes or presses ByteDance to sell TikTok by, I believe, January 19th, 2025. Obviously, there's lots of appeals going on in court. How do you think that is going to end?
I think the bill will survive any legal challenges, if for no other reason than we spent months and months working through a draft, inviting technical assistance and feedback from the administration. This was the product of multiple iterations. It was a very thoughtful process. In fact, it's exactly how the legislative process should work. And you had the legislative branch working with the executive branch. I'm very confident it will survive any legal challenge. And listen, the outcome we want to see is that the Chinese Communist Party allows ByteDance to divest TikTok away from its core business. And therefore, you could have an American company, European company, some conglomerate assume ownership. Users could continue to use the platform without the fear of espionage or coercion or propaganda that's infecting the platform right now.
So here's a question for you. Here is Congress saying this is a very dangerous platform. And yet you have former President Trump using the platform for his campaign, and you have Vice President Harris using the platform for her campaign.
This is the part, dude. This is the part I just cannot believe.
What does that say?
Democrat or Republican, how are Trump and Kamala both using TikTok, and they're both saying TikTok is like espionage, spyware stuff from China? Like, that part to me is actually insane. That's the type of stuff that makes you never want to trust these politicians, because they all hate, they all say one thing and do the other. Now, Trump has been a little bit more bullish TikTok, but it is kind of crazy that at least Kamala, whose administration with Biden passed the TikTok bill, is now marketing her campaign on TikTok. Like, that to me is just insane.
About the danger.
Well, neither should be using the platform. I think it just shows that political expediency, the desire to win younger voters who are hyper online, is taking precedence over national security concerns. Now, that's the bad news. The good news is, I think my committee in Congress has shown that Democrats and Republicans took this issue seriously. If you look at the final vote tally, we got over 350 votes. I'm not sure anything else has commanded that level of bipartisan support. So I do think, notwithstanding the political exigencies of the moment, there are thoughtful members of Congress and the executive branch trying to do the right thing. And I will concede this is a very complex issue. It's bound up in a broader issue of cross-border data flows, foreign adversary control of social media. And so it's not just cut and dry, but we tried to be very nuanced in approaching a complex issue. So it's why I'm optimistic about the path going forward.
All right, so that's the interview we got. Shout out to John again, this Twitter account right here, getting us all the clips. I'll put their Twitter in the description. Please make sure to follow them if you want to get updated immediately on the clips that come out in regards to Palantir, and also just a lot of other tech companies, because they're really quick to get those clips, and that's how we were able to watch this today. Now, here's the thing on the TikTok bill. Look, I agree with a lot of you guys in the chat saying that TikTok is where the people are. That's where you have to be to use TikTok. I get that. Totally understand it. Like, you have to be on the platforms where people are to be able to access their attention. I have zero problem with that. My problem is with the hypocrisy of it. Like, that's the biggest issue I have. If you're Kamala Harris with Joe Biden banning TikTok, saying that it is malware, and it's the CCP is using all that data to then do horrible things, you can't be contributing to that data. Now, you have to ask yourself a question. Do I want to get more young people to vote for me, or do I want to turn my back against a literal bill that I passed that says that TikTok is the worst thing on earth? And if you pick the other, that's fine. It just makes me not trust you ever on what you're saying, that on the legislation that you passed. And so that's the really weird part about it. It's like, you can't say that you hate TikTok and that it's horrible and that we need to get rid of it and then use it just for your own selfish needs, right? Because the whole point is to take a sacrifice and not contribute to the platform. Especially if your concern is that young people are getting manipulated on TikTok, but you're only on TikTok to access young people. You're contributing data to the CCP that can then use that data to manipulate against young people. So I don't know. I've never understood the TikTok thing. Personally, I don't think TikTok needs to literally be banned. I think that they need to get a new owner outside of the CCP, which is what the bill calls for. Now, will that happen by January 19th? Absolutely not, in my opinion. They said January 19th, we need to get a decision. Dude, there is no way in hell, in my opinion, that TikTok either is going to get banned or that it's going to get sold off to like Microsoft and that the servers are going to change overnight. I think this is going to be stuck in appeals for years. I think if Trump wins, he's probably going to reverse this because Trump, we talked about this a long time ago, Jeffrey Yass, the owner of Susquehanna Group, has a $28 billion net worth. 21 out of that 28 billion is in TikTok. He has given a lot of money to Trump, given a lot of stock to DJT. He owns about 600,000 shares of Truth Social. So I don't think Trump will allow TikTok to get banned. But if Kamala wins, I still don't think TikTok's going to get banned either. Amit, what you're not realizing is that they're all hypocrites. Yeah, well, I mean, that's the thing. It's always hypocritical. And like, I can't be surprised that politicians are hypocritical, but it's just crazy to me, dude. They're like, we hate TikTok. Come follow us on TikTok. And I'm like, what, dude? Like, if you think TikTok is that amazing to be able to use to access people, then you think it's a great platform, then don't say you hate it. Just say you're going to use it and don't critique it. And definitely don't pass legislation that's going to critique it because you obviously don't believe in it. But nonetheless, I think Mike Gallagher is incredible. Trump is on TikTok. Yes, Trump and Kamala, they're both on TikTok. Mike Gallagher, incredible. That was my first time really watching him. I'll do a deep dive video on Daily Palantir today, so we'll go deeper into who this guy is. But China Hawk, he unilaterally believes in the West. He is echoing the same points that Karp echoes in terms of American manufacturing and how American corporations need to take a stance on things. And for investors, this really just means ka-ching, ka-ching, because if this guy has the right connections, he should be able to get us more deals. More deals means more government growth, and more government growth is better for Palantir stock. So at the end of the day, I think this is the right move. You need people like this. Whatever they're paying him, they're probably going to make a lot more off of his connections. And that's something very important to get in the context of Palantir. Speaking of Palantir, let's transition now to Snowflake. So Snowflake had earnings yesterday. Snowflake is down about 10% right now in the pre-markets. This was a nasty earnings. Now, not because of the growth. The growth actually wasn't like bad. They're growing 30% on the top line. They raised guidance on the, you see there's a red candle right there. They raised guidance on the Q3. The street was expecting 20%. They had 22%. The problem is, dude, that earnings call, it was down 5% going into earnings. It fell another 3 to 4% right after earnings because the call itself was just bad. And for those that were on the call with me, I think we should just be so grateful that we picked Palantir over Snowflake because it was ridiculous, dude. It was just stupid. Like the CFO did not want to answer questions. The CEO does not know how to communicate effectively. I'm sorry, that CEO, Sridhar Ramaswamy, he does not know how to explain a vision around AI. He just doesn't. There were 700 people in the chat that I know everyone was like, what is this guy saying? Like at a basic level, what is he talking about? And so because of that, I think the street has lost confidence. I think the street has lost a lot of confidence. And the CFO was just mean to the analysts. He was like legit a jerk. And it just makes you not want to trust any of that management team with your capital. This is the biggest stat to understand about Palantir and Snowflake. So Snowflake has done $733 million of stock-based compensation this year. They've done $1.6 billion of revenue. When you divide those numbers, you get about 44 to 45% of their revenue going to SBC. They are not GAAP profitable either. Palantir has done $1.3 billion of revenue this year with $266 million of stock-based compensation, translating to 20% of revenue as SBC. That's actually within industry standards for SaaS and a little bit lower than some of the other companies in SaaS, showing that Palantir has gone in line with their SBC. Now, this was bad in 2020. Palantir had 70% of their revenue as SBC. That has changed, as it should. Over time, that should go down as the company grows. That's what's happened. But Snowflake, it's gone up. Snowflake is spending double the amount of Palantir on SBC, but they only grew 29% in Q2. I'm saying only because Palantir grew 27. There's not really a big delta between 29 and 27. It's only 2%. So Snowflake is delivering 2% more growth unprofitably with 24% more stock-based compensation and with double the employees. Palantir has 3,700 employees. Snowflake has 7,600 employees. Some people were saying, well, oh, that stock-based compensation is important to retain the talent. Well, actually, if you look at the employees, 3,235 out of the 7,630 are in sales and marketing. So I would imagine a lot of that money in stock-based comp is going to salespeople to incentivize them to sell the product. I think Snowflake is in a clusterfuck. I think it is absolutely a clusterfuck. If you look at the year-to-date performance of Snowflake, it's down. Now it's down 40% year-to-date. Palantir is up more than 90% year to date. There is a reason for that. One provides value. One does not just, I hate to say the same term over and over again, but take you to steak dinners, because that's legit what happens. Like when I was at ironically, steak dinner with Chad at AIPCon, he's been in data analytics for 20 years. And he said, dude, when Karp says they take you to steak dinners, Chad told me like he's been on hundreds of steak dinners his whole life because he controlled budgets for a lot of organizations he was at in terms of their software spend. And literally they take you on a steak dinner and they try to like convince you to buy the shit. Whereas Palantir saying, let's go to a boot camp and let's show you the value. I think that is a fundamental difference. I think Snowflake as a trade, as a swing trade, we'll talk about the stock in a second. I think there's a possible element of swinging it here and there because it's probably going to, if it falls even further, then it gets, I think it was already oversold at 130. I think it can get deeply oversold. And there could be some trade element there, maybe selling some puts on it, get some premium on it. But as an investment, I don't know, dude. As an investment, it's tough. It's really tough to think that you're getting some fundamental value from a product where the CFO and the CEO don't want to talk to people on the earnings call, which is the one time you're supposed to sound excited to talk to people. And number two, they're giving away all their revenue. I mean, they've done $431 million in free cash flow. They're probably going to do $800 million for the year. If they keep up the stock-based compensation pace that they're doing, they're going to do $1.4 billion in stock-based comp and only $800 million in free cash flow. Palantir, on the other hand, is going to do about $950 million in free cash flow and about $450 million in stock-based comp. So like even just the fundamentals in terms of the actual margins, their gross margins as well, maybe they bottomed this quarter. We'll see what happens, but they're at about 76%. Palantir is at closer to 82%. Why? Because Palantir is not spending this massive amount of compute or capital on compute to create some random LLM that Snowflake is creating that they think is going to accelerate growth, whereas Snowflake is. And so far, we're not really seeing in the guidance the growth from that Arctic LLM Cortex AI product, which you would think you would see higher than 22% growth if you were investing that much in AI. So in general, I think I think the company's in a tough situation. Now, in terms of the stock, look, I think the stock is oversold. There were a couple of notes that came out today by Goldman Sachs, JP Morgan. All of them have lowered their price targets from 230s, but they lowered it to like 180, 170. So even they are thinking, hey, 110, 115, 120, even 130, that does feel a bit oversold for a company that's going to do close to $4 billion in revenue. And I agree with that. The problem is you can only get away with that when the management team, you can only get away with having bad numbers, but not disgusting numbers if the management team gives you some excitement for the future. And that earnings call, I listened to the whole thing. There was no excitement for the future. And there was really no explanation of the present. So it's down 9%. If I had to guess, I think it, I don't know, dude. I think people wake up this morning and they just get annoyed by Snowflake and they maybe dump it and move on. There is a world where people just buy it up because they think, all right, 122 is too cheap. The low for the year was 107. That was on August 5th. If we break below, I think the technical level is 110, then I think 100 is in question. So if we drop another 5%, it could drop another 10% after that, because then there's just like no room for support. But 107 was where it touched on August 5th. I don't know if we necessarily hit that. It has to hold 120 to really start to form an uptrend again and not be just like demolished after these earnings. It's already down 9%. So it's already taken a big haircut. I don't know if it needs to fall another 9%, but could that happen? Yeah, I think that could happen because that earnings call was just disgusting. And so I agree. They're missing Slootman. They're missing Slootman a lot. Slootman left them. And the new guy they got, he just can't inspire. I watched his interview with Kramer last night as well, dude. It's just uninspiring, dude. It's just like if Starbucks gave their new CEO $100 million and that increased the market cap by 20 billion overnight. Forget overnight. It was in like 2 hours. 100 million for a 20 billion ROI. It means the CEO matters. And if the CEO matters, I think you really got to be able to communicate. And at least from the Snowflake CEO position, I just don't think there is a massive level of communication. AJ says, I work in this space. Snowflake is a commodity. That's the other thing. At the end of the day, what Snowflake is creating does not seem to be something that is fundamentally unique or differentiated from the broader market. And we're seeing this with Databricks, right? So Snowflake's data warehousing product and Databricks, I think I talked about this the other day. Databricks acquired a company called Tabular for $2 billion. And they're doing 1 million in ARR. I'll say that again. The startup is doing 1 million in ARR, 2 billion valuation they got acquired for. Snowflake wanted to buy them for $2 billion. By the way, Snowflake has done 4 acquisitions already that haven't really increased growth. Palantir has done 0 acquisitions and organically grew. But they couldn't buy them because how do you tell shareholders, yeah, we're going to spend $2 billion on a startup doing 1 million in revenue? Like their stock would have been down 50% that day. So Databricks, which is commoditizing a lot of what Snowflake is doing, is starting to kind of beat them to the race. And because they're private and they don't have to care about public shareholders, they can do some of these acquisitions that ends up helping them. So at the end of the day, I think Snowflake's in a tough position as an investment, as a trade. Maybe there's some opportunity there, but we'll see how the market opens and see how this ends up playing out. Let's listen to Mohamed El-Erian. He was on Bloomberg today and get his thoughts on what's going on in the broader labor market and what he thinks the Fed will do at Jackson Hole.
On Bloomberg Opinion, pretty extensive and a long list of asks for Chairman Powell tomorrow. I'm going to go through another quote that you wrote. It is particularly critical that people come away from Wyoming with a clearer picture of the new equilibrium policy rate that neither restrains nor fuels economic activity, the path to that rate, and what a sustainable 2% inflation target means in practice. Now, that's what you want. Are you expecting to get it this week?
I hope I'll get one of those three, if not two. John, it's critical because as you and Danny have been discussing this morning, it's not just about price volatility, it's been narrative volatility. People have moved violently.
That's a hell of a point. It's been less about price volatility. It's been about narrative. I mean, look, we were on the edge of our seats yesterday. I was about to say seat of our edge. Dude, is that a new hay in the needle stack? Is that a new hay in the needle stack? A seat on our edge? We were on the edge of our seats yesterday because of this jobs data. So there is a lot of volatility just in the narratives in the market, and every bit of data makes us more volatile in terms of what the narrative will be.
In terms of the narrative of the economy, in terms of what the Fed should do on the basis of high-frequency, noisy data. And that tells you that we're lacking anchors in this economy. We're lacking a robust growth anchor. We're lacking a robust policy forward guidance. And we're lacking a robust technical anchor. So we should hope for the Fed to start restoring the policy anchor. The way you do that is you tell people where you see the destination and how you think you're going to get there. That's what I think he should do. Whether he does or not, I'm not sure.
Well, let's talk about what complicates it. The second anchor, forward guidance. You yourself, this is your language in your piece, you call it an ocean of genuine uncertainty. How do you provide forward guidance in an ocean of genuine uncertainty?
The same way we do everything in life is that you say, this is where I think it is right now. This is where I think our star is, as opposed to saying, I'm not going to talk about it. This is where I think it is. It is dependent on these variables. And I will modify it if a mid-course correction is needed.
I think Mohamed El-Erian is right there. And at the end of the day, he's basically echoing the statements that we have to be very data dependent and reactive on all the data that comes out. For those that are just joining, the jobless claims that we got this morning, they came in line with expectations. S&P 500 at, 562.38 in the pre-market. So S&P is up on this news. We did not lose more jobs than expected, which is relatively good news for the markets. Yeah, guys, I think seat of our edge. I'm gonna make that a new amidism. So next time I have to say we're on the edge of our seats. It is official, seat of our edge. I think hay in the needle stack, seat of our edge. Can someone start like a little Google Doc and just seat of our edge and hay in the needle stack? Those are the two amidisms, and we're gonna keep adding to that from there. Anyway, it does. And by the way, you guys know that was authentic too, because like I didn't like make that up, seat of our edge. Like I literally just said it wrong. But because I said it that way, I was like, it kind of sounds better than edge of our seats. It seems like the S&P has so far reacted very nicely to a lot of this data. Let's look at the year-to-date chart here. Again, we looked at this yesterday. 565 down to 510, now back at 562. We are literally a couple bucks away from hitting all-time highs on the S&P. Does it happen today? I think the jobs data gives it precedent to happen today. The pre-market shows it might happen today. And then as the market opens in about 1 minute, we'll see if the market has the momentum to give it to us. But the narrative volatility is massive in the broader market. There's a lot of different narratives going around. Even yesterday, for the majority of the 3 hours we were on for the market open, we talked about two different narratives: the bull narrative and the bear narrative. And the bear narrative, you could chalk up a bunch of different ideas to get you to feel things are going to collapse. And then same thing in the bull case. I just think the bull case has better data than the bear case, but it's very volatile based on what narrative starts becoming normal. And as we head into September, it's going to be time to see what the rate cut narrative ultimately looks like. And then we got J-Pow on Friday. J-Pow on Friday is going to legitimately confirm or deny the ability for us to feel if we're going to get a rate cut or not, which is probably going to be true. He's probably going to give us the rate cut and probably give us a dovish hint of a rate cut, but that is going to create a new narrative going into September that will likely be more volatile for the markets. All right, folks, make sure you stay on the seat of your edge. It is 9:30 a.m. The stock market is once again open. Wake your ass up. Here we go. S&P 500 opens 562.42, up about 33 bips. Not bad on the S&P 500. Again, closer to all-time highs at 565. Snowflake opens down 9.6%. It's not falling that much more after that, but it is down. Let's see if it catches any momentum here, if there's a little bit of a green candle that forms, or if it continues to fall. Now it's down 10.5%, so it continues to fall. 120, that'll be big if it breaks 120. So we'll see that if the sell side pressure can outweigh the buy side pressure on Snowflake. S&P 500, wow, there you go, green candle as we open. 563 potentially. 563, up about 40 bips right now. Robinhood at $20.25. Tesla $2.24. Palantir goes green, $32.57. If you're just joining, Palantir has hired Mike Gallagher, one of the biggest hawks from Congress, to be a defense consultant for the company. We watched an interview of that about 20 minutes ago. We'll talk more about that later during the day. But that is news for Palantir. I also think a firm put out a $35 price target on Palantir, if I'm not wrong. It's not like a really, really big firm. But if anyone can confirm that for me in the chat, there is a firm that put out a $35 price target. It might not be one of the really big ones, but I think they did do that. Robinhood, $20.22. NASDAQ up 0.5%. UiPath, $12.27. Zoom up 3%. They had a decent earnings. Nothing too crazy or too exciting, but 62.35 on Zoom. Snowflake recovering a little bit at 122, so they're getting a bit of a green candle right there. S&P 500, 562.87. Rivian, 1304. Alibaba, 83. Mercado Libre, 2000. Adobe, 567. Delo, 858. Where's Nvda? I think Nvidia's at 129. Nvidia's at 130. Nvidia's at $130. Let's see if it can hold 130, because that's very bullish. Well, maybe. I think it's bullish going into earnings, but I also think it's running a little bit too much into earnings. So we're going to see, dude. Earnings, I think earnings will slam it out of the park. I just hope, even if it's at like 135 on August 28th, that the market doesn't like stay flat because it's up too much. So hopefully 145 or at least 140 is in the cards if Nvidia can continue raising momentum. Let's look at the Mag 7. Wow, we're all green. Apple's green, Microsoft's green, Meta's green, Google's green, Amazon's green, Nvidia's green. Nvidia leading the way up 1.6% now, trying to touch 131. That's pretty incredible. Tesla red on the day, 221.91. I don't think there's any news on Tesla, so I'm not sure why it's red, but it was green by like 4% yesterday, so that's why it's probably taking a little bit of a breather. The semiconductor stocks are mostly green. AMD's almost at 160, SMCI 630, Intel's red, ASML is red, Broadcom is green, Broadcom following Nvidia up 1.4%. Dell 90 to 113, not a bad swing. If you have that Micron, I think this was also at like 95 to 110 now. ARM's at 132. Still think ARM's overvalued, but it's up 1.22%. And then Taiwan Semi at 173 on the day, which is not bad. Okay, so we have some decent green. HIMS, yes, HIMS got a price target upgrade to $24. They're up 3.32%. Needham indicated the price target. They said HIMS is a leading brand dedicated to providing accessible and affordable healthcare solutions for sexual health, dermatology, mental health, and weight loss. While the stock has seen increased volatility associated with its launch into the compounded GLP-1 space, we believe we will have a more positive than negative impact on HIMS. Even without our contribution from GLP-1, HIMS is growing at 40% at over $1 billion in revenue and boosts multiple levers for growth. So that's fair. I mean, that's kind of the bull case I've heard from a lot of HIM bears or HIM bulls the entire year. It has been a good year for HIMS, but it is still down from that $24 level. Seems like GLP-1 is kind of the core catalyst the street is looking at. Palantir at 32.62 right now. Robinhood at 2012. Bitcoin up a little bit, but declining from that 61,800 level that it was at earlier this morning. Nvidia at 130. Snowflake at 120. Now Snowflake's getting hit. Snowflake not really getting that support at 122. So you got another red candle down almost 11% on the day for Snowflake. I'm curious when the bleeding stops or if the bleeding continues, but Snowflake is down at 121. Palantir at 32.56. Spotify 345. CrowdStrike is just incredible. If you look at the monthly on CrowdStrike, this is one of the most hilarious charts I've seen ever. I mean, look at this thing, dude. This thing has absolutely collapsed. It went all the way down from 300 to 192, right back up to 277. They got an upgrade today from to 315, I think, by Goldman Sachs. And the argument was that they're probably not going to lower guidance as much as the street thinks they are, which is why they're going to be in a normal situation. So you got CrowdStrike at 275. I mean, if you bought shares at 275 and watched it go all the way down to 192, I mean, it came right back almost as if you didn't have to do anything. And if you DCA'd, then you were able to reduce that average as well. Google at 167. Where's PayPal? PayPal 72. Not bad. 72.50 was bad that it didn't close there yesterday, but it's nice that it's reclaiming 72. If we can hold that today, that'll be awesome. 72.18 on PayPal. Where is SoFi? SoFi being red is weird. I feel like SoFi should be up today. The jobs data was good. We're going to get a rate cut. The Fed FOMC minutes were super dovish. Again, some of the Fed presidents wanted to cut literally in July. I don't know why the market's not factoring in rate cuts coming soon for SoFi. So weird that SoFi is down right now, but that is down a little bit. Peloton is up 18%. They had good earnings. They beat on the top and the bottom line, and so Peloton is up. So if you're in Peloton, congrats. That is up 18% on the day, now touching $4. Where is ASTS? That one is down 3%. I'm surprised ASTS is still holding 35, dude. It's up like 800% in the past 2 years, and it's not really giving up the 2,000% gain that it had in the past couple months. Rocket Lab also doing a great job holding these sixes, dude. I mean, like it's basically at $7 at $6.99. It was stuck at $4.20 for a very long time. There you go. Now it's at $7. And it hasn't really given up a lot of that momentum. I think ASTS brought more people interested into the space sector, and companies like Rocket Lab, Saidu, ASTS, they got a bid from that. So nice to see Rocket Lab gaining that momentum. Nvda at 130, Snowflake now at 120.58. Looks like it might fall below 120. Just a nasty day for Snowflake, down 10%, just losing about $5 billion in market cap. Now Snowflake's worth $40 billion. In a couple minutes, it might be below $40 billion. In comparison, Palantir, again, Palantir's at $70 billion. And for the, there you go, 3270. For the longest time, it was Palantir at like $30 billion, Snowflake at $60 billion. Like the delta was ridiculous. Now Palantir kind of taking the swing and the momentum away from Snowflake. And for good reason. Again, the growth and the momentum is there. And so we should be seeing Palantir get some appreciation from the market. Robinhood at $20.21. Oh, I got to show you guys some things about Robinhood in a little bit. We have some new features that potentially are coming out. SoFi just went green. There you go. So SoFi now going green. I thought SoFi would go green. So there you go. HIMS at 17.23, and then Nvda right here at 130.26. Let's check the order flow resistance on Palantir real quick. All right, so let's check that. I have to get my phone. Let's see. So on Palantir, we're at what? We're at 3270. Where are we at? 3275. All right, so we're 25 cents away from cracking 33. On 33, how many shares are waiting? 16,000 shares. That's not crazy. And okay, so 3282 is actually going to be hard. Never mind, we just cracked it. Well, so okay, so no, we still didn't crack. There's 40,000 shares at 3282, but we just cracked it. We literally just cracked it. Okay, so that was easy. We need that Staples button. That was easy. I was like, okay, there's the wall. All right, here we go. I think it's trying to make a run. There's no more walls at all. There's 0 walls. 33. There's 16,000 shares. If it just broke 3285 with 40,000 shares, I think it could break 33 with 16,000 shares. 3294. Holy crap! I think it's about to happen. I think it's about to come. 3295. Uh-oh. Dude, this is the Snowflake shareholders saying, fuck Snowflake. We're done with this. We're finally going to listen to this crazy Indian kid on YouTube, and we're going to take a chance on Palantir. Maybe that's what's happening. Maybe that. I do think to an extent, some people are just dumping Snowflake, and they're like, this is stupid. This is dumb. Like, why are we still in this company? Where's Snowflake right now? 120.29. Palantir 32.98. 32.99. Dude, is this it? There's no wall. We should be able to easily get here. There is no wall. There is no. I just got hit. It got rejected hard. There's really no wall. I think we test it. Bro. Damn, it got rejected. Why is it getting rejected? Okay, so there's obviously orders I can't see on the dark pool, but like, there's really nothing stopping it that aggressively from 33, bro. There's really not. Like, there's a couple thousand shares at every cent going into 33. And where's the volume as well? What's the volume on it? Volume is 5. Oh, that's perfect. 5 million shares is amazing. That's great volume. That is great volume. I'll buy one share when we get to 32.98. That's when I buy the share. It's like 2 to 3 cents away from 33. Someone said I'm selling 10 million at 33. Okay, that's not going to help us. Oh my gosh. Wait, can I set a limit order? Yeah, hold on. Buy one share. I must set a limit for 32.98 and see if I could just do that. Damn, it got rejected hard at 32.98, bro. What? It got rejected hard. I think we make a run back for it unless that was like a fake little pump. It actually got to 32.99. Look at that. Wow. That was probably something I couldn't see on my order flow. That was probably someone who had a big ass order, because I would have seen it if there were that many shares getting sold off. But like my order flow is not perfect. So that was probably someone who dumped a crap at 32.99. Or it could have just been algos that didn't want people to get to 33. I mean, a lot of times algorithms don't like those psychological round numbers to become official. If you got 33 covered calls, I know you're sweating a little bit. You just got to deal with it for now. The algo said no. Yeah, the algo said no. Where's Snowflake? Snowflake's getting a little bit of a green candle, holding on to 120. Palantir trying to make a run back, 32.84. Rocket Lab, look at Rocket Lab, up 3%. Wow. SoFi now is up 0.3%. S&P hit 563, dude. Now we're at 562.7. Not bad. Robinhood, $20.24. Netflix almost at $706.99. And then Palantir 32.88. Where's Nvda again? Nvda 130. Nvidia still holding 130. PayPal 72. HIM 17. And then Palantir 32.84. I think we should make a run again into the high 32.90s, and then 33 should be possible. There's still 18,000 shares at 33, but to get there, there's not that much pain. It's secretly selling at 33. Yeah, that was me. That was me that was stopping it. Dude, I have like all these like random 1 share purchases in my order history, because like since February 5th, every time we like hit a milestone, we have to buy a share. All right, here we go. Looks like I'm about to have another 1 share at 32.98. I've got it loaded up. Let's see. I really do think this is Snowflake coming into Palantir. Like, these are some people that are just tired of management that doesn't care or that doesn't respect them. Come on, broski. Let's get this done. We've been in the 30. I'm so greedy. We're all so greedy in the chat for wanting 33. Like, we're literally so greedy, dude. Like, we look at the year-to-date chart, it's up 94%. And we're like, hey, why not some more? But still, this is America, right? You shouldn't be sad for your greed. You should be, greed is good, right? Wasn't that the quote in Wall Street? Greed is good. Come on, bro. There really isn't no resistance, bro. Now it's just a question of people not selling at 32.90, 32.95. Like, people need to not sell at those levels. Amid, is that a Pro Max? I'm thinking of going iPhone in September from Samsung. Is that not too large? No, I've had a Pro Max for like 5 years. I love the Pro Max. I really like the large screen. So, okay, here we go. We're making some momentum. And I like the iPhone, so I'm biased against that. But I've always liked the iPhone. Bro, every time we get to 32.9, who's selling at 32.95? Someone's just like dumping every fucking time. Like, just chill out a little bit. Let it get to 33. Like, let it just chill. Do we get PMI at 9:45? I didn't even know that. Okay, so that might be a macro piece of data that actually helps about that might help or hurt Palantir. So I didn't know we get PMI at 9:45. In 2 minutes, we'll see PMI. See, right here at 32.94.95, it gets hit. And I don't know who the hell's selling. Like, why are you, after you see those Snowflake earnings, if you're going to bet anything on data analytics, like, this is not the one to sell right now. I feel like it's algos. I don't think any reasonable person is selling this in an uptrend. Also, if you look at the cup and handle on Palantir, I look at some of the TA accounts on Twitter that are like really good at TA, dude. They see this thing going to 45 by the end of the year. Now, look, I don't know if that's fundamentally justified, but the cup and handle looks great on Palantir. Like, it is one of the best charts in the entire stock market, just because Palantir broke out of a big resistance level. And then it slowly moved up from 16 to 20 to 25, now to 30. So it looks like the next leg is further to the upside. But we got to crack 33 first. We got to crack it. By the way, I'm wearing my Palantir shirt. I don't know if you guys noticed, but I came in yesterday, so I'm wearing my Palantir shirt today. 32.92, SoFi 732, PayPal 72.27, Robinhood 2031. We've got some new updates on Robinhood. We'll talk about that in a bit. You guys might have seen my tweets on it already, but dude, Robinhood is about to just like dominate in another sector of the market, and should be launching pretty soon. So we'll talk about that We did get some more selling yesterday on Palantir. I think Ryan Taylor sold another like 100,000 shares. So I think insiders have sold about 2.5 million shares in the past couple of days, which is fair. I mean, the stock's up 90%. You would imagine people take some profits. But even with all that selling, dude, oh, there it is, 32.94. Then it got hit again. Even with all that selling, Palantir's still able to go up. Like, market kind of doesn't care about the selling. They're like, there are so many buyers willing to take those shares off of other people that the market doesn't care. 32.95. I'm waiting for 32.97. Then I'm going to do the one share. 32.95. We're testing it for the 5th time in a row. It should crack right now. It was carp selling, not deal. All right, 32.97. I just bought it. I just bought it. There it is. I got it at 32.96. 32.96 was the purchase. This was my first share in the, well, it's not my first share in the 30s because we did the one share before, but this is my first share in 32, I think. Let's see if that's enough, dude. Let's see if that's enough. We're so close. The wall is 22,000 shares at 33. 22,000 shares. So that's going to be what we need to break through. PMI is in. All right, that might actually make or break Palantir. Let me see if I can get the PMI results real quick. And let's see if that's good or bad. I don't even know what the expectations are on that. So let's see. PMI is good. Looks pretty. No, it actually looks bad. It actually looks kind of bad. But we're still going good. 32.98, dude. Holy crap. It gets rejected every time, bro. So PMI services was 55.2. The estimate was 54. So we beat on services. Manufacturing, the estimate was 49. We came in lower at 48. So we beat on services. We came in lower on manufacturing. Where's the S&P? Does the market hate that? Does the market hate that? The market doesn't like that. Market doesn't like that. That's not that big of a deal. Yeah, Nvidia's dropping. S&P is dropping. Market doesn't like that. So we beat on services, which is good. For those that don't know, like you just above 50 is expanding, below 50 is contracting. On services, we're above 50. On manufacturing, we're below 50, which is not good. But I don't think it's enough to like get the market that upset. It doesn't seem horrible in my opinion. Like I think we would see a little bit more of a dramatic reaction if it was that bad. Also, it's like by 0.5%. Like that's not crazy, dude. I don't think that's horrible. Home sales in 12 minutes. That one usually doesn't affect the market too much because we already know home sales are going to be bad. But yeah, we'll get that one as well. Okay, so we got PMI. We got through that. Market seems to have digested that. Palantir dropped to 32.83 like for 2 seconds and moved on. Robinhood doesn't care. S&P is still red candle, but still holding 562. And now Palantir is back at 32.89. So at 32.99, there's 3,300 shares, and at 33, there's 24,000 shares. So there's basically 27,000 shares we got to get through on those last 2 cents to keep going. I definitely think this is algos, dude. I don't think someone has a limit order ready to sell at 33. Or like, I don't think that many people care about selling literally at 33. I think these are algos. Because if it breaks 33, your limit order is probably closer to 35 for the sell, not 33. Unless you like legitimately really want to sell it at 33. So I think this is more algo driven and we're going to need some buyers here. All right, here we go. 32.98. Here we go. This is the moment. This is the moment. This is when it needs to crack it. This is when it needs to actually take a swing. This is when it needs to take a swing right here. And rejected. There you go. And rejected. Some of you guys are seeing 33. Yeah, I don't see it on Webull or Robinhood, and those are the ones that I got to use. So it hit it on 2 and 12. Yeah, on some brokerages, it'll probably hit 33 for like a second. But we have to see it actually hit 33, like stay there for a bit for it to be 33. Someone sold at 32.99. Thank you. Thank you so much. That is that helps us so much. We appreciate it. Goodness gracious, dude. 32. Where's Tesla? Tesla's green as well. Tesla's moving up. Tesla 223. All right, Tesla just turned green. SoFi just turned red. Rocket Lab still $7. S&P now going back to green. It was red for a second. I mean, it had a red candle for a second. Now it has a green candle right there. There you go. You're getting a little bit of momentum on the S&P from the red candle after the PMI data. All right, back here, 5 cents, folks. 5 cents separates us from being up. I think this would be up 100% if we're at 33. No, it wouldn't be 100. It would be up like 97% year to date. If we end the year up 100%, dude, that'd be so gangster. It'd be so legit. Snowflake 119. Oh my God. Snowflake's collapsing. Down 11.8%. What a crap show on Snowflake. That's just sad. That's just sad. Absolutely disgusting, dude. Down 12% on Snowflake. Palantir at 32.97. All right, this is it. If it gets rejected again, then it's algos, I think. Yeah, there you go. Rejected. It's the algos, man. I don't know if they want this to happen. This is so stressful getting to 33. It is stressful, dude. Like, it's tough. Yeah, we'll ring the bell at 33 if we can get there. Like, I think it's algos, guys. I think it's algos. I mean, we'll stay on and we'll keep coming back to it. But I think I definitely think the algos are pursuing this right now. I do not think it is retail selling it at 33. All right. So it seems like it's algo driven. We're gonna have to see how that plays out. We do get housing data soon. The PMI data again wasn't that bad. I'm looking at it right now. Here are the actual PMI results. Again, not too bad. I'm gonna move on from the just staring at Palantir. If it hits 33, let me know. I'll keep an eye on it on my phone as well. But we'll keep moving on and we'll go back to it if we get closer there. U.S. manufacturing PMI 48 versus 49. Services 55 versus 54. So you see the beat on services, the miss on manufacturing. Global composite PMI 54 versus estimates of 53. So we did beat on the global composite, which is good. But we missed on manufacturing. I just don't think this miss is so dramatic enough for the market to overlook the services beat as well. So PMI seems like it's not a horrible situation. RFK, did he officially announce that he's gone? I think he's announcing it today. He's definitely going to endorse Trump today. But we don't have, or it actually might be on Friday in Arizona. So Polymarket has a 94% chance he endorses Trump. It looks like today he's endorsing Trump. But I don't think he announced it literally yet. That'll be big for Trump in the polls, and we'll see what that means in the context of the market as well. Friday? Yeah, probably Friday. That's bad because we need manufacturing coming in higher and services lower. I don't disagree, and I would have loved to see a beat on manufacturing, but it's not such a bad miss it's not like 43 versus 49 expected. It's kind of just like, it's kind of like 48 versus 49. Like, it's not the worst thing in the world, in my opinion. But yes, a manufacturing beat might have taken Palantir already to 33, because that means good news would have been good news. If you're just joining, Palantir has hired Mike Gallagher. That was the big news this morning that we saw today. China hawk guy that is very stringent against China and defending Western values. So Palantir has hired him today as a defense consultant. And that hopefully is going to be another thing that helps Palantir over the coming months as this continues to go further. Okay, so let's see what else we have going on in the market. I should talk about Robinhood. Palantir 32.93. Let's see if it can crack it right here. Back into the 32s. Again, I think it's the algos, but then we'll do the Robinhood segment. S&P going green again, 562. SoFi still down 1%. I don't know why SoFi is down. I have no clue. I have zero clue why SoFi is down. The rate cut is definitely coming, so I don't know why the market's just not front running it. But SoFi's down. 32.97. All right. If we get rejected again, then I'm convinced it's algos. If we get rejected here again, I am convinced it's algos. Absolutely convinced at this point. Let's see. 3 cents away. 3 cents away. Either we bust through or it's algos. 2 cents away. 32.98. 32.99. Here it is. This is the moment. It's got to happen here. This is the time. You got to lose yourself in the moment. This is it. There we go. 33. Wait, do you see? I saw 33. Did you see 33? I saw it. Weeble's not showing it, but I saw it. Did you guys see it? I feel like I saw it. Did you see it or no? Did anyone see that? I didn't see it on Weeble. Well, oh yeah, it touched Weeble for a second. All right, so we're gonna ring the bell because at least we touched it. We touched it. There it is again. There it is. There it is. There's the momentum. There it is. Now it's real 33. There you go. There we go. We're above 33. 33, baby. 33. 95% up year to date, bro. Whoa. 30 freaking 3. It's not bad, dude. Not bad. We hit it. And look, the fact that we touched it 2 times after getting rejected, and now we're getting rejected again, it is kind of bullish because it just means that there was a bid at 33. Like someone legit bought it at 33, right? That's why it hit 33. So even though it's falling right now, there is a chance it can reclaim that because there was momentum, whether it was algos, retail, institutional, that was ready to buy it at $33. Dude, talk about a journey, bro. Talk about a fucking journey. $33 in a year from 16. Just fucking incredible, bro. Like, no one expected it. No one expected it. I mean, it's just Wall Street definitely didn't expect it. The far majority of us thought it would have a good year. I don't know how many of us thought it would go to 33 by the end of the year when it was at 15. Like that's my price target in the beginning of the year in January was 25. I was like, look, if we end up 25, that's up 50%. I will be more than happy. 33 is beyond my expectation. So I'm a very happy shareholder. And now, again, here's the biggest thing about 33. Here's the biggest thing. It is normalizing being sold or being bought at 30 in the $30 range. Whereas Snowflake at 119, down 12%, getting a little bit of a green candle right there, but still down 12%. And that's the thing I care about the most. Look at that. It's touching 33 again. It tested 33. This is what I'm saying, right? Every time it touches 33, it means there's a bid. So even if it gets rejected, there's a good chance it can try to get back up there. We are normalizing $30. And because we are normalizing $30, the more it stays here, barring any macroeconomic concerns, the more likely it is to continue to stay in the 30s. And, a lot of us in the chat probably haven't bought that much in the 30s because we bought a lot below the 30s. And I think eventually, if it's about share accumulation, we're gonna have to get used to buying in the 30s as well, right? Like, I definitely know for myself, I'm gonna have to buy my first tranche of like 100 shares in the 30s, which I haven't done yet. And because at the end of the day, if I think the stock is 300, then at the 30s is cheap, right? If I really have a long-term mentality on it. 3309, there you go. It's breaking out a little bit. There you go. It touched 3310. So I don't know if now is the time to normalize buying it in the 30s because I still think we need to like show and prove momentum. But I think for all shareholders that want more shares, now if you have your position, then you don't need to buy more shares, right? Then it is whatever. But if you want more shares, if you want to build accumulation, you've got to get ready to be able to buy it in the 30s and not care because you believe that there's more momentum inside of it. So I think by the end of the year, what Palantir is going to do is prove that buying in the 30s is not crazy. Even though the valuation, obviously, it's up there. It's a tougher valuation in software. But given what happened with Snowflake yesterday, this is why I'm not saying this just because I don't like Snowflake. I'm saying this because I listened to that. And the reason I sat through the 2 hours of miserableness listening to that call was because I wanted to affirm my own confirmation bias that this company is full of shit. And after listening, it became obvious if the CFO is being a dick to an analyst and like not even trying to help him understand the business after they had some issues in Q2, then yeah, like I'm not trusting these guys with a cent of my money ever. And so I think that money genuinely is leaving a commoditized data warehouse platform that has no understanding of how they're going to actually allow AI to be meaningful. I mean, one of the things that they said on the call, dude, they said you need to understand how to code in SQL, or you would need to at least understand SQL, the language, to be able to use Cortex AI. The whole value of LLMs, and Rodney, who was there in the chat, who pointed this out yesterday, the whole value of LLMs is to use natural language so that someone who is not a subject matter expert or a software engineer who understands SQL very well can still interact with the data just by typing words and commands into the prompts. The fact that you need to know SQL just to be able to access Cortex AI in specific use cases is ridiculous. And it shows that the value proposition that they have on AI is not really as strong at all, or at least not what the market thought. So my point is, I don't want to harp on this, but my point is I think money is leaving some of those SaaS companies and it's going to Palantir. The reason I'm saying this is because although Palantir's valuation is kind of up there, I mean, it's up there. If you're not going to get the value in Snowflake or Datadog or whatever, you're going to have to buy Palantir. And I think that's how it's going to end up playing out. So that's why we're getting momentum here. And we got Sam here sitting on the snow of my edge right now. Oh boy. Yeah. I mean, look, and at the end of the day, do I think Snowflake's oversold? Yes. And I think a company that's going to do, close to 3.5 billion in revenue probably does not deserve to be sub 100 because I think the valuation will get a little crazy there. But does it deserve 140, 150? No way, dude. Because that's a premium valuation. Even at 130 yesterday, that's a premium valuation. Now, Palantir, I sound kind of greedy because Palantir is getting a premium valuation, but Palantir has a premium fucking CEO who actually makes you listen when he talks. There's a difference. There is a difference. And because there's a difference, I think it justifies a little bit of a difference of evaluation. So I think that's the momentum. And I think that's the reason for Palantir. Speaking of Palantir CEO, let's watch a 2-minute video from Alex Karp to remind ourselves a little bit on how customers are getting value from AIP. The difference between him and the Snowflake CEO is just night and day.
What I would tell any of them is, how are you doing it? Well, there's a technical answer, which I gave you the precursor of. But again, do you want to know how we're doing it, or do you want to enjoy it being done?
Both. Really.
Great. Well, first you want to see it works. Yeah. Like the central issue, I think, we have hundreds and hundreds of CEOs. And by the way, the thing about the 70 people here presenting is, they're presenting to other people. I'm not paying them to present. The reason they're presenting is they're like, wow, I didn't really believe this could work. And now it's working really well. So the most important thing, by the way, for a normal user, someone who's going to pay is, does it work? Then the second question is, how does it work? Does it scale? What is the commercial model? You really have to establish it works. I would stand by the thing that in this case is, people think of large language models as the value in of itself. What they're going to find is the large language model is much more like a chemistry experiment, the outgrowth of which is something that is useful when refined. And the refinement of that for your enterprise happens in what we call our ontology, which is where
Karp speaking like that and actually explaining the value of LLMs and AI and the ontology, Snowflake down 11.6%. Those 30 seconds, that was nothing that you got on Snowflake's call yesterday. Palantir at 32.95. And so that's the difference, dude. That's the difference. There's a fundamental difference between those two companies. And, so for some people in the chat that are just like, there's no way you can be paying a 30 times price of sales on Palantir. Like, that doesn't make sense. I agree with you from an analytical perspective, pure valuation. Yeah, that's rich. It's up there. But then the qualitative part of my brain, which is, I think the people who missed Robinhood did not think creatively. The people who missed Palantir did not think creatively. It's not always about the numbers. You have to think from a creative perspective. Why are people betting on Robinhood? Why? Well, they see them as the next generation's Schwab, and that's because they're innovating for that generation. Why are people betting on Palantir? Well, they're actually providing value to their customers, and people are fed up with steak dinners and PowerPoints and selling them useless shit and giving stock-based compensation that's higher than your entire free cash flow. And so valuations are important. And I think 2022 proved to us how important valuations are. But valuations cannot be the only thing that clouds a judgment in terms of analyzing a company. There has to be something more. And at the end of the day, Snowflake and some of these other companies, they don't have founder CEOs, whereas Robinhood and Palantir do. And those founder CEOs have a vision. They guide that vision. They're able to deliver growth. And that growth ultimately leads to shareholder returns. So there you go. Not bad at all. I don't know if we stay 33. Algo is probably taking over right now, but we did hit 33 for a good 4 or 5 times. We broke out at 33.10, 33.13 on the day. So now we'll see throughout the rest of the day if we can continue to maintain momentum at 33. But not bad. Yeah, it's going to be tough, dude. Now at 33.02, there's like 21,000 shares. So the algos are definitely going to get in there. There was just enough buying pressure to overcome the algos, I think, for that first run. We can definitely make a run again, but it's still going to be a little tough holding 33 as well. Doug says, imagine being a company that uses Palantir and realizing your vendors and suppliers don't. Yeah, and that's the network effect for Palantir as well, dude. If you're a company that uses Palantir and you realize your subcontractors don't use Palantir, you're going to make a pitch to your subcontractors to become more efficient because it'll make the entire business operations more efficient and probably get them onto Palantir. Like the ability for you to share data, for those network effects to compound, and for more and more people to see value out of Palantir's platform inside an integrated ecosystem, supply chain, etc. That should lead to a lot of top line growth, dude. Like I'm going to make an example. If you're Kellogg's and you're integrating your supply chain through Palantir, but part of your suppliers are not integrating their supply chain through Palantir, it's a very simple conversation of like, hey, why aren't you guys just like all integrating it in the same way? And I think that is going to lead to more value. And a lot of that is going to lead to more boot camps where Palantir is going to be able to show those subcontractors and sub-suppliers why they should be using their platform. And we saw on the earnings call, the time to delivery from pilot to contract has reduced to days or weeks from months and years like it was in 2018. Or in 2021. Snowflake now at 118.8. Snowflake down 12%. Palantir making another run at 33. There you go. We're at 33 again. And so I think that's going to compound the growth even more over the next coming years. So it's important, dude. It's really, really important. And look, I think it's important to harp on this as well, because at the end of the day, if you're a Palantir shareholder, you have to justify the valuation. This is why I spend so much time on this. I might sound like a broken record sometime, but like I am in a lot of conversations with a lot of people every day. Some people bullish, some people bearish on Palantir. I get a lot of perspectives to try to form my thesis on this company. Because I talk about it every day, right? So I always want updated news and information. And I have to listen to the bear case from various groups of people that really break down the valuation. They're like, this makes no fucking sense. And so at that moment, I have to look at what does make sense. And what does make sense to me is that the Snowflake CFO is a jerk. And sometimes, you know what makes sense? Not investing in jerks. Just not giving your money to people that like don't want to answer your questions on an earnings call. So as much as the numbers might scream, hey, it's paying a lot. And again, I do think the numbers are up there, but at the end of the day, we're reaccelerating. Snowflake is deaccelerating. A lot of these SaaS companies are deaccelerating. Palantir is using AI to reaccelerate. So the reacceleration maybe doesn't justify a massive multiple, but it does justify the potential to grow into that multiple, which is a way you could hedge back against the bear case on the valuation. And then qualitatively, if people like the company, they're going to buy this. Like people like Elon. Is Tesla really worth $800 billion? No, but people they love Elon. Like they believe Elon's going to win. And so people trust Elon. And at the end of the day, a lot of times that's how some of these generational companies become valued over time until they grow into their valuation. Same thing that happened with Amazon. That happened with Amazon for a long. Amazon was unprofitable and overvalued from 2014 to 2019 until it finally hit the switch. People were betting on Bezos. They believed Bezos was going to get the job done, and he got the job done. And now he's selling so much stock that this thing can barely break 190, but still, he got the job done. So I think at the end of the day, that's how you can begin to evaluate Palantir. Okay, 32.97 on Palantir, hit 33. We'll see if we get back there. Let's see some other updates we got going on. I think we talk about Robinhood now. Let's do a segment on Robinhood and see what's going on with Robinhood. Actually, before we do Robinhood, let me do this thing about Microsoft. So this is one bearish thing about the market that I'm confused about, and I would love anyone to offer any guidance if they can. But did anyone see this yesterday? After hours, Microsoft issued preliminary guidance for Q1 for fiscal year 2025. And these were the results. Q1 intelligent cloud revenue is going to be $24 billion, with Azure revenue down 1% to 2% sequentially. Productivity and business processes revenue projected at $27 billion, and more personal computing expected at $12 billion. I don't think productivity and more personal computing mattered, but Azure being down 1% to 2% sequentially, I don't think that's good at all, given the market tanked Microsoft by almost 15% when Azure missed by $40 million in Q4 earnings. So the market didn't react to this at all. Palantir now at 32.85, so getting a little bit rejected at 32.90. Microsoft's up today at 4.25. So I just wanted to bring this to your guys' attention. I guess the market kind of expected that Azure would go down sequentially. Or the market feels that it's not that big of a deal because other parts of their business are enough to overcompensate. But this part was a little weird to me yesterday. It seems like the market doesn't care, but I did want to bring that up to you guys because if Microsoft reports numbers where revenue is down 1% on Azure, again, the market literally only cares about Azure. So I wonder if the market would have a massive reaction in Q3 on this, or if they would just like not care that much because they already knew about it. Now, granted, my kind of the one thing about Q3 is that there is a double bind here. The Max 7 spends too much CapEx and then the market tanks them, or the Max 7 spends too little CapEx and then the market tanks them. So I think either way, Q3 is going to be a little interesting for the Max 7. And the market's going to have to figure out how they want to evaluate them. I think the only thing that saves that double bind from becoming true is if Jensen Huang delivers such an amazing earnings. By the way, Meta is at all-time high. I don't know why Meta is at all-time highs right now, but Meta is at all-time highs. I don't know. I think Jensen has to give such a big earnings report in the numbers and in the call that he calms down every analyst that is concerned about CapEx being too high and seeing no ROI because Jensen says, hey, give them some time, or calms down the concerns about CapEx spend going down a little bit because he can argue that CapEx has already been built out so much and they're booked for so many quarters that even if the Max 7 spends a little bit less on CapEx, that's not necessarily going to hurt their overall top line guidance. He has to really navigate this earnings call in a way that puts all, like this earnings call for Jensen Huang is not just NVIDIA's earnings call, it's all Max 7 earnings calls happening at once. Because whatever he says affects all of those companies. And I think he's going to have to do a really strong job painting a narrative for the market that gets them excited about AI and it gets them to not freak out about what's going on with CapEx. But yeah, Meta's at all-time highs. I don't know why this is happening. If someone has any headlines in the chat, let me know. Palantir now at 32.73. Where's Robinhood? Robinhood 2026. Meta right here at 541 on the day, touched 544. And where's the S&P 500? 561.17 on the day. Okay, Robinhood. Let's talk about Robinhood. Earnings is on 828. Earnings is on 828 for those that don't know. So, Robinhood is getting ready to roll out futures. There was a screenshot posted yesterday by someone who showed in their Robinhood account, it's probably being tested in beta, that they can unlock their perks by get 25 cents off of their future commission fees, and they can unlock this and they can start trading futures. Now, this was really exciting to me. And so I did some digging and tried to do some research in the context of what's going on with futures and why does it matter and why that's important for Robinhood at the end of the day. And I came away pretty bullish on this. So let's read a little bit about this. Futures and trading futures. I've never traded futures before, but for those that are in the chat that have traded futures, let me know if you have and how the process works and kind of how the commission structure is set up. But essentially, it involves buying or selling contracts that obligate a trader to purchase or sell an asset at a predetermined price on a future date. Now, there's a lot of ways to make money on futures. You can have commissions, which it seems like Robinhood is going to do based on that screenshot. Marking up the bid asks, charging interest on margin accounts, since futures are typically traded with leverage, selling order flow to market makers. This is what Robinhood does with options and with equities. Charging fees for platform access, maybe the Robinhood Gold platform with that new web trading app. And you can engage in proprietary trading. Now, if Robinhood can execute on this successfully, futures are going to be a more successful product in terms of their take rate than options. They have a 46% take rate on options. What that means is that for every option contract that is traded, Robinhood makes 46 cents in revenue. And the reason futures might be even better than options is because brokerages have generally had a higher take rate on futures compared to options. And this is because of significant interest earned on margin accounts, higher commission structures, and lower competition among futures platforms versus with options and equities. There's so much competition that it's harder to get a massive take rate on those contracts. So I would imagine maybe Robinhood makes, I don't know, 50 to 60 cents per contract on futures versus on options. They make 46 cents. With equities, they make like 5 or 6 cents. Additionally, futures tradings also involves more institutional professional traders who require specialized services that comes with a higher cost. So in October, we're going to see the unveil of a new web trading platform. What that means for investors is essentially more investors are going to have more access to different types of trading features. And that's just going to be another revenue stream for Robinhood. If you look right here, this is from the screenshot. They're going to allow you to trade orange juice futures, lean hogs, crude oil, S&P 500, European stocks, Japanese stocks, like all of these things, commodities, raw goods. You're going to be able to trade everything right on Robinhood. And I think the memes on that are going to be amazing. And as I'm saying this, market's going red. So let's take a look at the market. But I think it's gonna be so funny because like people trading their orange juice options on Robinhood is gonna go like super viral. It's gonna be so funny. But that will unlock more revenue, and as that revenue unlocks, I think that's gonna be bullish for the broader company itself. As Bayray says, 0-day orange juice futures. Who's with me? Exactly. That's gonna be, dude. It's gonna be the funniest thing ever. I hope it doesn't hurt retail, but it's definitely gonna be hilarious to see like the memes and how that plays out. All right, market's going a little red. We're getting our typical 10 a.m. sell off pretty much every day at 10 a.m. At 10:15, it's at 10:13. We start to see it sell off at like almost like clockwork at 10 a.m. At least over the past couple of weeks, we've seen a sell off right here. Snowflake now below 118 and down 12.6%. Snowflake absolutely demolished. The market going red definitely doesn't help. Nvda just went below 130 at 128. Robinhood at $20.15. Bitcoin still green, but about to go red. Palantir probably just went further in the red. Yeah, 32.68. So Palantir is down from 33. Palo Alto 357. Path is down. It's not a crazy red sell-off, but we do have a sell-off from the top. QQQ is at 483. Now QQQ is at 482. So, I mean, even the Qs are still relatively green, even though we are seeing a bit of a red candle. When is Robinhood coming to Canada? I have no idea, but it's hard, dude, because there's so many restrictions in Canada with regulations that I don't even know if Robinhood's going to want to try to come to Canada, just given all the shit they're going to have to go through. But, and that's the other thing we haven't talked about, Robinhood's international expansion, dude. I mean, like if they bring this to Malaysia and Singapore and Japan, like there's going to be so many ways for them to expand. And I think that's going to go international. But at the end of the day, I think futures trading is going to be really exciting for hood investors. I'm probably not going to engage in that because I don't know what I'm doing if I trade futures, but maybe I'll learn more about it, trade one here or there, just get an understanding of it. But I think for professional traders that want better bid-ask spreads or lower commissions, whatever it is, I think Robin is going to unveil something exciting. And if they do that, then that's another revenue stream for them as well. This dip is not really, I mean, it's selling off, but it seems a little bit more technical, guys, because we're not seeing, like, the S&P already reclaimed 561. We bottomed at 560 from 562. So this red, even Snowflake now getting a bit of a green candle right there. It seems a little bit more algo. Palantir back up to 3271. Doesn't seem like the sell-off was that aggressive at 10 a.m. Did we get housing data? Is that why we saw a sell-off? Let me see. PMI was okay. PMI wasn't horrible. Let's see. New home sales, right? That was the data. New home sales. Existing home sales in July, 3.95 million. Existing home sales month over month up 1.3%. That's not bad. We beat expectations in July. The market expected 3.9 million. We sold 3.95. That's not horrible. That's not bad. That's not poor, especially given how crappy the housing market is. That's not horrible, dude. So I think the market probably sold off a little bit on that data, but that data, I mean, people are probably going to buy the dip on that data because that data is not too bad. So this and PMI today, this along with PMI is not bad. It's not bad at all. And I mean, after 2 weeks of green, you would expect some red in general, but the macro piece of data. So we got jobless claims, PMI, and housing data. All 3 of those. The only thing that missed was manufacturing PMI. Everything else, services was fine, jobless claims were fine, and then housing just beat expectations. So, I mean, if we're very dependent on the data so far today, the 3 pieces of data that we got, all pretty much in line with expectations and not too bad. I will never trade Mayo futures. That is not happening, dude. Dude, I got to the point where yesterday I heard this in a song. Someone made a rap lyric with the term Cinco de Mayo. They like used it in a creative way, and I realized like I don't like Mexicans anymore. I mean, I'm just like Cinco de Mayo, dude. I can't. I'm sorry, dude. I don't think I can. I can't associate. I just can't do it, dude. Cinco de Mayo. It's not. I don't know, man. It's like if you're gonna keep mayo as part of your culture, it's gonna be tough, dude. It's going to be tough. It's going to be, obviously I'm kidding. I'm joking. But I heard it in a rap song yesterday and I was like, what? Did he just make a joke with Cinco de Mayo? And then I was thinking about mayo? Huh. I'm not a fan of this holiday anymore. I am not a fan of this holiday anymore. Oh my God. But yeah, in general, mayo futures would be hilarious. When is Adam on the show again? We should get him on next week. Adam's been busy for the past couple of weeks. He's been doing a bunch of stuff with the real estate. But we got to get Adam on the show pretty soon. No Cancun for you. I've never been to Mexico. I don't think I've ever been to Mexico. So I've never done Cancun or like all those fancy places people vacation at. Palantir now 32.56. Just looks like it might go red. I would love to go to Mexico though. I've never had like that spring break at Mexico that people do. HIMS at 1670, Nvidia 128, Robinhood 2020, Bitcoin 60,697, Zoom at 6615, Meta 540, QQQ 482. Why is Meta at all-time highs, bro? What is going on with Meta? Like, this thing is already pumped so much. Why does it keep pumping? What is the news there? It's not even a holiday that is celebrated in Mexico. Really? They don't celebrate. So is Cinco de Mayo like an American version of like celebrating something that you think is from Mexico? Because in America, there's like parades and shit. They make it like a super big deal. That actually makes sense that they don't celebrate in Mexico. That actually makes sense that it's not celebrated in Mexico. It's just in America. Yeah, that's what I thought, dude. It's one of those fucking holidays that's commoditized. It's like Chinese food in America that's like not really Chinese food, but it says it's Chinese food. Our Independence Day is September 16th. Okay. Oh, wow. So that's coming up. That's coming up soon. Yeah, India's was just August 15th, so it's a month after India. Annual meetup in Mexico. We could have a Mayo theme. No, we're not. We're not doing that, bro. We're not doing that. Palantir must be closer than ever to be adding to the S&P 500 now. I would agree that they are very close to getting added. The problem is, we talked about this yesterday, their institutional ownership sucks. And it is not enough for I think the committee to get excited. So September 6th, we'll actually find out in 2 weeks if they get in. But I don't know. I don't trust that committee. I don't think they're I don't think they're going to give us the nod yet. But we'll see. We'll see if it happens. If it does happen, I think we're going to 35 very easily. Carrillo 369 says, we are just like, what? 5 de Mayo? What is that? That's hilarious, dude. I didn't know that. Okay, so thank you for telling me in the chat, those that are Mexicans, that Cinco de Mayo is not even a real Mexican holiday. I went my whole life thinking like that's like an important day in Mexico. Apparently, it's just the commoditized American holiday of Mexico. Of course it is, dude. That's what America does. We always do that shit. Always somehow. All right, let's go to CNBC. Let's get an update on what's going on in the markets, and then we'll keep going from there. Amid, how long will you be in India for? It will be October 5th to October 21st. So that's about 2 weeks, a little bit more than 2 weeks. You know what sucks, dude? I still think I'm gonna have jury duty in November because I delayed it from February. And if I have jury duty in November, I don't know how I'm getting out of that, because if I have to jury duty, I can't do the market open because the lady said it runs from like 8 a.m. to 4 p.m. every day. So I don't know, dude. We're going to have to really see how I pull it off. I'm going to have to finesse my way out of jury duty, but I don't want to miss like a month of market close in October and then again in November, because that would suck. But market open will still happen in India. It'll just be like 6 p.m. for me and 8 a.m. for you. All right, here we go. Let's get an update and then we'll keep going from there on CNBC.
A Q2 beat and a full year guidance hike. Analysts citing a deceleration in growth among the reasons for the stock's drop this morning. It's a steep one, 11.5% lower. Another name moving lower is Urban Outfitters, as same-store sales for Urban Outfitters brand fell 9.3% in the second quarter. And then also watch Peloton. Nice jump there after the company reported its first sales increase for the first time in 9 quarters. The stock is still down more than 40%, though, over the last full year of trading and way off of its.
Shout out to my uncle in the chat, Manish Manjal. He says, tell them it's an electricity problem in India. Yo, we're going to have so much fun when I see him in India, because now I'm like much older and like we both are like obsessed with the stock market. He actually watches these streams now. He's in the chat. So shout out to you. Well, I'll see you soon. And dude, we're like, my mom and his wife are going to be so annoyed at us, because literally all we're going to do in India is talk about the stock market. So we're probably going to do a podcast. We'll do a podcast live and we'll talk. You guys will be able to see him and we'll talk all about stocks.
Pandemic highs.
Let's get some existing and head out to Diana Olick. Hey, Diana.
Hey, Carl, existing home sales in July broke a 4-month losing streak, rising 1.3% month to month to a seasonally adjusted annualized rate of 3.95 million units, right along expectations. Sales still down 2.5%, though, year over year. I would note these are closings. So sale contracts signed in May and June, when mortgage rates were still over 7%, we're now down to around 6.5%. But the good news is that supply is rising. 1.33 million homes for sale at the end of the month. That's up 0.8% month to month, but up a whopping 19.8% year over year. And that's probably why we're seeing more buyers come into the market. We're still at a 4-month supply, though, due to the higher sales pace. A 6-month supply is considered balanced between buyer and seller. And that low supply is still keeping the pressure on prices. The median price of a home sold in July was $442,600. That's up 4.2% year over year, but it is no longer the all-time high price, if that gives you anything, but it is still up year over year. We do have a lot of all-cash buyers in this market, though, 27%. That's up from a year ago. And the sales continue to happen on the higher end of the market. Sales of $1 million plus homes up 26% year over year. And that's because the supply is up over 30% in that higher price range. Supply is down on the lower price range. And that's why sales are skewed toward the higher end. Sarah?
Okay, Diana, thank you. Modest tick up there in Treasury yields on the back of that report. 10-year at 3.8%. Diana Olick, thank you. The other report to mention of the day was jobless claims. We get them every Thursday. A number of Americans filing for unemployment claims ticked up a little bit, but to 232,000, I mean, it's still low, and it speaks to a labor market that hasn't.
By the way, recession is 350,000 a week. So when you see those many jobless claims, then you're going to recession. So still relatively low for the recession concerns.
Produced a lot of layoffs, which is good news, especially because we're really on guard for weakness in the labor market. Now, the trend has been a little bit higher, so we obviously watch that, but no real stress or all-out stress to talk about in the weekly unemployment claims. It was a 4,000 increase from where we were last week. Also monitoring some of the comments from the retailers, especially on the consumer today. And again, there's talk of softening, but not collapse. Here's Urban Outfitters CEO, for instance, or COO, I should say. While consumer traffic has remained consistent, overall purchasing activity has shown some softening. Customers appear to be exercising more discretion in their buying decisions. That jives with what we've heard from some of the other retail CEOs. Advanced Auto Parts CFO, we expect consumer-related headwinds related to maintenance deferrals and lower discretionary spending to impact our trajectory in the short term.
Okay, we'll go back to that. But yeah, there were a couple companies yesterday that did say the consumer is weakening a little bit more. Apparently, we have some breaking Tesla news, folks. BMW outsold Tesla on electric vehicles in the European Union for the first time last month as the German car maker managed to increase shipments in an otherwise weakening market for battery-powered cars. That's not good. Is Tesla down on that news? Tesla is down 1%. That's not good. That's definitely not good. How is BMW outselling Tesla on EVs? Can someone explain that to me? Why is that happening? Like, I didn't even know BMW has EVs, dude. Like, like EVs to me are a Tesla thing, and I know there's other competitors, but like, why are people buying BMW EVs over Tesla EVs? Why is that happening? You know, one argument, and I hate this argument, but I'm still going to say it because you got to be objective here. One argument is that people in Europe hate Trump. They don't like Elon supporting Trump. I mean, dude, it might be as simple as people just like don't like Trump and don't like Elon. I mean, that's a very elementary form of analysis, but it is one explanation, maybe. I don't think it's just hybrids. If it's counting hybrids, then I don't know. Then the whole article by Bloomberg is wrong. If it's EVs, then it should be actually outselling them. BMW outsold Tesla on electric vehicles in the European Union for the first time last month. Sales of fully electric BMWs in the block jumped by around a third to basically 15,000 in July. Tesla, well, okay, this is not that big of a beat. So BMW sold 14,869. Tesla did 14,561. So BMW is up 33%. Tesla's down 16%. But the beat is like by 300 cars. That's not that big of a beat, but it is a beat. They did beat them there. I don't know, dude. That's weird. Why is Tesla supposed to be the most luxurious car for EVs, in my opinion? Like when I think of Tesla, like I saw it, dude. Let me show you this picture. I took this picture yesterday. I was going to tweet it. I was at the gym because, you know, your boy goes to the gym, and I saw this Tesla in the parking lot. Look at how sexy this thing is, dude. It's just a red Tesla. Like this is actually a car I would like. Like if I were ever to get a Tesla, it would be a bright red Tesla. It's just so hot. And I was like, this is like such an amazing car. It shocks me that people pick any other EV above it. Now, look, I'm not a big car guy, and I know that there's different benefits to having different EVs, but Tesla seems to be the cream of the crop. PayPal 72.46, HIMS at 16.81, Tesla at 220, down about 1.16%. BMW is luxurious. That's a $30,000 car. Well, yeah, that's in my budget. So good. That's in my budget. Look, I know BMW is like better and like is like the seats are leather or whatever the fuck people care about, but like I don't think it should be outselling Tesla, bro. Unless people in Europe just care that much more about luxury, which I guess is probably fair. Do you guys think it's Trump at all? Do you think it's Trump at all? Do you think it's Trump at all or no? I mean, maybe that's not true, but like, I don't know, dude. Europe definitely doesn't love him. The UK really hates Twitter, and at least their government hates the sort of free speech element of Twitter. You guys don't think it's Trump? Some of you think it's Trump, some of you don't. Well, then how do you explain this, dude? How do you explain this? What's the explanation for this? Like, is Tesla just losing its appeal? Well, again, even though this is happening, the argument we've been talking about for a long time is that, and we talked about this yesterday, Robotaxi event 1010 has to pivot the company to make analysts think of rides versus cars. Like, this is the bottom line, dude, if you're a Tesla investor. If Elon Musk does not set an appropriate and specific timeline on Robotaxi rollout on 1010, I think the stock tanks. Because at the end of the day, if you're not able to outsell BMW with EVs and you're declining in volumes and you're not even going to grow 10% CAGR this year, they would have to do another 600. They would have to do 600,000 cars in deliveries for the last 2 quarters of the year, Q3, Q4, just to CAGR at 10%, which is not a lot of growth in terms of vehicle deliveries. That's not going to happen, but they're not going to do. They're probably going to maybe do 450,000. So if that's the case, deliveries is not what's driving the momentum. The margins are still not really going up, even though they've started to bottom. So then where's the growth? The growth comes from FSD, which means you need to have a timeline on when FSD is going to be available. And if you give a definitive timeline, I think it starts to scale, and I think the street rewards you for that. If you don't, I think the street gets really upset, and they're just like, why the hell are we wasting our time here? But the pivot to FSD has to happen by 10/10, and it has to be definitive at this point. Record sales in China. Yeah, China is doing better. That's good for them in China. Well, that's another thing that Bay Ray points out in the chat. EU is lowering their tariffs on imports from China. So that should actually make Teslas technically more affordable, which will help the hopefully broader deliveries and volumes as well. Toby says, I think it's just competition. As good as Tesla might be, there's brand familiarity, luxury, and status associated with certain brands here. Yeah, Toby, you're in Germany, right? So you know that the luxury market is a bit different. This isn't a big deal. Tesla's fine, and BMW had to do a lot of advertising and promotion. Yeah, I mean, that's fair. You could say BMW is spending more on ads. It's just at the end of the day, I think the company has to show the pivot to rides to get this thing moving. Did you see the tweet from Jeremy about Elon? I did not. Can you link it in the chat, Myra? Are you talking about Jeremy on the YouTube Jeremy? Yeah, if you link it in the chat, let me know and I'll take a look at that. Those people that bought the BMW are going to regret it when the cars get older. Tesla falling now on this news, down 1 point. I think that it fell as soon as this article came out at like 10:20. The article came out, down 1.6% now. Yeah, now it's getting a red candle. Well, the S&P is going red too, so market's getting a little bit of red candle. Nvidia is down 128. Robinhood 2014. And again, this is kind of expected. We've had 2 really good weeks. I mean, I wouldn't be surprised tomorrow if we end red on a Friday. Like, it's been a hell of a 2 weeks. So you would imagine we get a little bit of sell off and people take profits. The article came out 2 hours ago. Okay, well, I guess now so then market's not really affecting to it if the article came out 2 hours ago. Market's just going red based on the broader S&P collapsing. In general, dude, this article it's whatever in the context of Tesla. It's just another point of data about EV winter and it not being as lenient towards Tesla in terms of gaining market share. And again, this is not me saying this. This is their Q2 earnings. Elon fully admitted, hey, people are just not buying EVs as much anymore, which is why he's focused on selling rides. So 10/10 is going to be the definitive factor here. 10/10 is going to determine everything. But if 10/10 doesn't have a timeline, I think it's going to be tough, dude. What is the total deliveries compared to? So they CAGR'd at almost 25% growth in 2023. Now they're doing less than 10% in terms of volumes and deliveries. And I think that's the problem. Is like, that's a massive decline. And rates going down, I don't even know if it's going to have that much of an impact on that either. So it's got to be a pivot to FSD. He's betting the company on FSD. And I think 10/10 is going to go well, but I just really hope there's a specific plan to roll that out. Because if there's not any specifics, I really don't think the street's going to have any sympathy, dude. Because at this point, I think they're getting tired and they need something real to show momentum. Okay, let's go back to CNBC and then we'll keep going from there and we'll see what other news we have right now.
With respect to quarterly trends, both our pro and do-it-yourself businesses have started off weaker, driven by the overarching macro pressure on the consumer. And I'll just throw in BJ Wholesale CEO. It's worth noting that members remain discerning in their purchasing behavior, which was evident in big-ticket seasonal categories such as patio sets and structure. So a lot of this, David, talk about discerning, choiceful, value, softening, but not a collapse, you know, and that's pretty much what we got from Target earlier this week as well, where the traffic increased because Target was able to give the consumer value, cutting costs.
Yeah, they lowered some prices. They brought people in and they benefited as a result of that.
That's where we are.
I always do wonder with some of this language, how much of it is an explanation that may be true, but not completely true, because some of it has to do with other trends as well, or a lack of execution on the part of the said company.
Everybody always can blame the macro, right? If they're if they're struggling.
Why not?
And you do see, I mean, you see a separation of winners and losers. I think it'll be really interesting in the coming week to get some of the stronger names like an Abercrombie, which has not talked about softening of the consumer and not talked about consumer being more choiceful because they've just been nailing it on trends and speaking directly to the consumer on social media and getting everything right. So you have to look for the stronger ones. I think also Nike is an example, right? They blamed they took ownership of some of the weakness that they've seen, but they also blame the macro consumer. And we've seen really strong results from some of the competitors,
right? Like
a Hoka or an On.
Yep.
So absolutely, that's what happens when a rising tide doesn't lift all boats. That was the story in 2021 and then into 2022. I also wanted to take up, since we've been focusing a lot on inflation, this idea of corporate greed and price gouging. You hear a lot about it from the politicians, and Vice President Kamala Harris's big economic response to inflation is that she wants a federal ban on price gouging, particularly for food and groceries. So I went back and looked at a chart. Here's a JP Morgan chart of some of the companies that I cover, the packaged food companies, and what's been happening with their margins. And here's the industry group, right? All the packaged food, Campbell's Soup, Pepsi.
This is super important.
All of them. Okay. And if you see at the end of the chart, the margins in the first quarter of this year are 34.5%. That's about where we were in 2021. And if you go pre-pandemic, it's pretty close to where we were in the 34 range. And we've been a lot higher in 2017, in 2018 on margins. The bottom line is that there's not a lot of evidence that these companies are juicing their margins by passing on extraordinarily high prices to consumers more than they're paying on input prices. So as far as a federal ban on price gouging goes, I think it's going to be very difficult to implement, and perhaps maybe based on nothing.
I know. And then
that's a big point, dude. That's a really big point. Basically going back against this narrative that Kamala Harris is saying that, hey, we need to stop this price gouging. If you look at the margins on these grocery chains that don't even have really good margins, they're not tech companies. Their margins are basically where they were at before the pandemic, and they're not exacerbating them to 50, 60% margins, settling in at 25 to 30%. Just because of the ability to blame it on inflation. Their costs have gone up, so they've increased prices, but it's not trying to get the consumer to lose every penny they have trying to buy some bread or some milk. So I think that is an important argument there, and that's going to be an economic piece of analysis that Kamala is going to have to do in terms of describing how she wants to implement price controls. We got the professor on CNBC as well. Let's get his take on what he thinks the Fed needs to do now that we got this new jobs data.
Jobless claims coming in just as expected. Join us right now to talk about the data, the markets, the latest Fed commentary, maybe what we're going to hear out of Jackson Hole. Jeremy Siegal, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business, also Chief Economist at Wisdom Tree. Good morning to you, sir.
Good morning.
So
Andrew.
What do you think of the jobless claims number? What do you think of this sort of larger, revision going back a year? Does it matter?
Let me try to explain where I have trouble with Fed policy. The Fed has stated that its long-term Fed funds rate is 2.8% when risks are balanced. Now, taking a look ahead 6 months, if I were to ask you, what's more likely, a flare-up of inflation or a weakening job market? Now, we got decent numbers certainly today, but between those two, I say it's balanced, maybe even more towards a weakening job market. Well, then why are we at the most restrictive monetary policy in over half a century if we have almost a risk-balanced look going forward? Now, a lot of people came back to me when I was, really agitated a couple of weeks ago. They said,
and you wanted 50 basis points, and then you switched gears.
I wanted 50 basis. They said, oh, it's not 2.8%. They put that down, but it's really much higher. The economy's doing well. It's 5.3 right now. Economy's doing pretty well. Maybe that neutral rate is 4.8%. So they only need really a couple of cuts to get to that particular level. Well, if the neutral rate for Fed funds is 4.8 instead of 5.3, then why is the 10-year bond at 3.8? If you go through history, normally the 10-year bond is about 100 or more basis point above the neutral Fed funds rate. which would put it at 5.8. Wow. Not at 3.8.
Right.
Something is sort of out of kilter here.
So what's the answer then? Meaning,
Well,
what would you do?
You know, I
if
think
you,
the Fed
if you were
is
in
just
Jackson
moving
Hole
way
right
too
now.
slow. I think they're taking on risks they don't have to take. If they would move it down faster, and I know that, you know, Steve said it's 25, 50, 25. I mean, if they go 50, 50, if they get back down towards that 3 grade, I actually think it's 3.5, a little bit higher than what they said. But the faster they get down, the lower the probability that they're going to have a recession and a significant slowdown in the economy. And that's basically, I would like them to explain what, with risk nearly balanced, why are they twice as high as they should be?
Okay, let me ask you a different question then. Given what you know, given what you want them to do and what you think that they may do, how are you thinking about buying or not equities in this market?
I think equities are, you know, they're basically you're at 21 times forward earnings. You know, it's S&P is within 1% of an all-time high. 21, you know, I've often said 20 is equilibrium, so it's a little high. Now, if you take out, you know, the Mag 7, you're at 17, 18. They look more attractive. I don't see the small and value stocks moving until the Fed moves. And maybe more convincingly, I think that Chair Powell is definitely going to open up a cut tomorrow in his speech. He will not specify how much it'll be. They still have 4 weeks of data coming. I certainly hope it's larger rather than smaller to get back to where I think that neutral rate is.
And then,
so, I mean, look, Siegal's pretty much been the same he's been for a long time in terms of his take on the Fed. I agree. I think the Fed should have cut in July. I think they're definitely cutting in September. I think anyone who thinks the Fed's not cutting in September, they're living under a rock and they're not looking at any of the data, including what the Fed says. And I think at the Jackson Hole meeting tomorrow, which I think will be live at 2 p.m., we will be watching Jay Powell basically tell us that he's going to cut. Now, here's what I wanted to show you guys in the context of September. We talked about it a little bit in the morning, but the last 4 Septembers, we've seen an average decline of about 5%. September 2020 down 4%, 2021 down 5%, 2022 down 9%, 2023 down 4.8% on the S&P 500. If we close the year at this price at 561 and we fall about 4.5%, that would put the S&P at 535, which isn't crazy if we end September at 535. But it definitely would put a wrench in the momentum that we're having right now. Now, here's one of the reasons why we might not end at 535. We get a rate cut. And that rate cut, if that creates multiple expansion, that creates a broadening out of the rally, that creates a pricing in of a rate cutting cycle just before the election, that could be very bullish. Now, what could be bearish about it is when the rate cut happens, it's a sell the news event. That could happen. Number 2, if Kamala starts winning in the polls and it becomes more likely that she's going to be president, September could be kind of tough, even October, because the markets might not like that. So that could be tough. And then Bitcoin, I don't know where the hell Bitcoin goes, but if we get a rate cut that's sell the news, even though that's good for Bitcoin, and we get a potential Kamala presidency going into November, I have no idea how November and December ends up playing out. If we have presidency with her, and if we get a rate cutting cycle that's not as welcomed by the market. So as Mike says right here, I think it could be choppy. It could be very choppy. Now, again, the bull case here is that the labor market, which is starting to weaken, might not weaken as much. Robinhood at 2013, Palantir at 32.64. When we get a rate cut, Tesla as well reclaiming 220 down from 219. And you might have Q3 earnings growth continue to be strong, even if it's not amazing, which could justify the further rate cuts, because that just means that we don't need to have the the monetary policy as restrictive as it is right now. The bear case going into Q3 is I think Mag 7 kind of shits the bed on earnings, and rate cuts become a sell the news. That's how Q3, and that's how this beautiful melt up rally could not become a melt up rally. I think there's more evidence pointing to the opposite, and there's a lot of momentum in terms of how the rally will happen and how the market's going to interpret the rate cuts and what will happen to small caps and mid caps and all that stuff. But I think those are the two perspectives there. September, regardless of what happens at the end of the year, September looks like it's going to be choppy. It's just hard when a month every single year is bad for it not to be bad. I mean, August, every single election cycle is green. It looks like August is going to be green at the end of this election cycle as well. And that's just historically what has happened for a variety of reasons. September might end up kind of being the same. So we'll see, but September, we're about 9 days away, and all the gains we got in August, maybe half of that goes away in September, but it'll be interesting to see how that one plays out. Snowflake at 118.41, bottomed at 117.77. Now down 12.4% of the day. Snowflake is officially below $40 billion in market cap, now at $39.55 billion. Just absolutely clobbered today. Some of that money I did think go to Palantir, but algos probably stopped it from maintaining 33. Meta back at all-time highs, 541. S&P back to being green. So we had a bit of a sell-off when the housing data came out. Now we're back green. Rocket Lab, wow, 721, up 3% of the day. Rocket Lab's green. And then Nvda was green. Now it's kind of red, but basically flat on the day. Bitcoin as well, now flat, 60,531. It was at 61,000 before. And that's pretty much what we got. Powell speaks at 9 a.m. Central tomorrow, so that's 10 a.m. my time. Okay, so as soon as the market opens, after 30 minutes, then 10 a.m. we'll be streaming Powell, and we'll see what he has to say. I think it's going to be pretty dovish, dude. I mean, if those FOMC minutes said that, hey, someone wanted to cut in July, I think it's going to be hard to imagine Jay Powell doing anything but being dovish. Okay, let's go through some headlines, and then we'll end out the show for today. So a bunch of different headlines I have. TD Bank, we saw this yesterday. They're selling 40 million shares of Schwab to cover a $2.6 billion provision for expected fines related to anti-money laundering. Not good news for Schwab. I think Schwab is down 4% on this news. But again, kind of pointing to the fact that, you know, legacy brokerages and banks, they just don't have as much momentum, which is what's causing different institutional investors to sell off some of their stakes. Nvda, Rosenblatt gives them a price target of $200. We expect Nvda to beat and raise its July quarter print and October quarter outlook, with the wild card being how constrained the company is for the Hopper platform. So that's why Nvda was actually green in the morning. They got a nice price target to $200. Snowflake, RBC says, our quick take, Snowflake delivered solid Q2 2025 results with product revenue growth of $829 million. Remaining performance obligations grew 48%, which was one of the best things about their quarter. By target 175, we believe that growth will still be in line with expectations, if not exceed that, which is why RBC is bullish on Snowflake. Now, granted, RBC is bearish on Palantir. So Snowflake has not worked out that well for RBC with their $9 target on Palantir, but they are bullish on Snowflake. Here's another thing about the Mag 7. So Mag 7 stocks are on track for their first quarterly underperformance relative to the rest of the S&P 500 in almost 2 years. So we looked at this chart on Sunday, but the rate of growth of earnings within the Mag 7 has deaccelerated from about 55% 3 quarters ago to 17%. So now you're seeing in 3Q, which is coming, that Mag 7 is probably not going to put up the types of earnings growth numbers they were putting up in the past couple quarters. And that's why I think there is one bearish case for the Mag 7, that if they just don't put up the right numbers, the street's not going to love it. And if those numbers aren't the most exciting, then, you know, the street's going to have to ask themselves, hey, are we calm because we think things are okay and we think they'll reaccelerate? Or do we think the AI from monetization from AI CapEx is just not really going to be as beneficial? And then final headline here, final piece of news. I thought this was interesting. Starbucks pumpkin spice lattes are officially starting today, August 22nd. I think the new CEO said, you know what we need to do? We need to do the thing that made us famous in the first place. We need to release this pumpkin spice latte ASAP. So this is the earliest they have released the pumpkin spice latte. Let me know in the chat if you've ever drank one of them. I drank one in college. It's absolutely disgusting. I don't know why people think pumpkin spice in their lattes is some amazing combination. Starbucks down about 0.5% today, but this is starting officially. And even stuff like this, small things like this, I'm curious how the CEO turns this company around. Maybe a simple enough of a decision of just introducing their premier latte earlier than expected is one of the ways that Starbucks turns things around. But that's what Starbucks is doing officially today. What is a pumpkin spice latte? It is a latte with artificial pumpkin inside of it. It's not real pumpkin. It's like flavored pumpkin spice inside of it. And it's supposed to be very fall oriented, autumn season. You're supposed to feel good drinking it. It's, you know, not too cold, not too hot. It's very popular with white girls in the United States. I'll say that. that's something they love those. But it is a big seller for Starbucks, and looks like that's coming out. Amit, do you like them? Are you implying I'm a little white girl? Is that what you're saying? No, dude, I tried it before and I was just like, I'd rather have a caramel latte. I would not have pumpkin spice. But people do like it, and that's why people care about it. Did you see the payout he got to join Starbucks? Yeah, $150 million or $130 million, I think. Which is crazy because they got $20 billion in market cap. So they got a nice return off of giving the guy $130 million. We got Tanner in the chat. Can confirm my girlfriend loves them. Yep. Makes sense, dude. I don't know what it is with white girls and Starbucks pumpkin spice lattes, but it's a thing, dude. Like, it's a legit thing. It's like in their DNA that they love that drink. And I've just never been a fan of it. I've always liked caramel over that. But that is, those are most of the headlines for today. Anything else we got going on? Snowflake's about to break below 118. Palantir just went red. Entire market selling off a little bit. Snowflake, wow, 117.44. Snowflake just went down 13%. So that one's red. Robinhood 20.2. I do think some people are saying is Snowflake a buy right now. Look, I think the put premiums will be nice on this, and I think like I don't know, if you're willing to buy it at 100, I think the premium is probably not horrible, but long-term vision for the company as a real investment is just not there to me. It's like as a cash grab, I think there's probably a swing trade here. But as an investment, after listening to that call, it's just tough, dude. It's just tough. Now, granted, the street has price targets at 170 to 180. So the street definitely thinks 117 and 130 was cheap. But I think if this market's about narratives, Snowflake needs a better narrative, and their growth is really not that narrative right now. All right. That's it for today, folks. Let's do word of the day. We'll be back at 3:45 for the market close. Let's see if this market takes a little bit of a turn and Palantir can get back to 33. The fact that we hit 33 today was amazing. And we'll just see how it continues to go from there. Again, ISM data, not bad. Housing data, we beat. And then jobs data, we came in line with expectations. All three of the pieces of data that needed to be good for today were good. Yesterday's data was not the best, but the market digested it. And so now we just got to end out August. We'll get money market fund data at the end of the day at like 4 p.m. We added 90 billion to money markets over the past 2 weeks. So hopefully we see a decrease and see some of that money going back into the markets. But we'll get that data a little bit later today. All right. Word of the day is splendiferous.
Splendiferous.
Splendid or magnificent. Do we need to start calling the Mac 7 the splendiferous 7? Do we need to do that? This is a good one. The holiday decorations around the city were splendiferous, creating a magical and festive atmosphere for all to enjoy. The chef prepared a splendiferous feast with every dish more delicious and beautifully presented than the last. This is such a this is such a gay word. It's such a happy word. You know what I mean? It's such a happy gay word. Like, who says splendiferous? Like, oh man, this pumpkin spice latte is splendiferous. Like, if anyone says that, it's like, you got a little gay in you. So maybe I'm gonna start saying maybe I'm gonna start saying this. But could you imagine, guys? Like, wow, Palantir hitting 33. That's just splendiferous, guys. That's incredible. I'm gonna use that word now while we're looking at stocks. I'm just gonna randomly throw it out there, and those who weren't part of this part of the market open, we'll see if they catch it. Some people are like, what the fuck did he just splendiferous? What the fuck is that? But there you go. There's your word. Magnificent. Splendiferous is, you got to stick your pinky in the air when you say that. Yeah, exactly. All right. So, Palantir held us on the seat of our edge today, and we got to $33, which was not bad. Fun to see. And, like a hay and needle stack, Palantir is just proving to be one of the most crucial companies in the broader stock market. And it's hard to find a company like Palantir, just like it's very hard to find a hay in the needle stack. But it looks like the market is starting to discover it. And it's very splendiferous. It's very, very splendiferous. By the way, have you guys seen Grindr? Dude, Grindr, I should have bought it on August 5th, dude. Grindr's fucking pumping. Where is it at right now? Look at this, dude. It's at $12.27. We were talking about it at $10. Or no, we were talking about it at 11. I wanted 9. And then on August 5th, I think I got $10.85. No, it bottomed at $10. Oh my God. It bottomed at $10, dude. We should have fucking just bought it at $10 and finally made it the position. But we didn't do it. Now, granted, that day I was freaking out. I was trying to buy more Robinhood options. So, like, we really didn't have that much cash. But I don't know, man. I don't like buying it at 12. They had a good earnings. They grew 27%. They raised guidance. All the numbers are good. I just still don't love the valuation. But it's going up. It's up 40% this year. So Grindr's doing its thing. Palantir 32.53, Meta 5.39. Where's Robinhood on the day? Robinhood 2016, and then the Palantir 32.52 S&P 500 is slightly red right here at 560.59 on the day. All right, that is it for me. Thank you, everybody, for being here. It was a very splendiferous market open. Hope you guys enjoyed. We'll be back at 3:45. No big news after the bell. No big earnings after the bell. Outside of money market data, yeah, nothing crazy. We have Intuit. Well, actually, no, we have Intuit, Workday, Kava, and Bill. Those are actually 4 decent companies. Intuit's a big SaaS. Workday's a big SaaS. Workday might get into the S&P 500. Kava is a important restaurant. They're up 145% this year. And then Bill, that's another SaaS that's going to be important to look at. So we'll have some decent earnings to go through after the bell, and we'll see what ends up happening. All right, thank you, everybody. Appreciate it. I will see you guys at 3:45 p.m. Bye, everyone. Have a good one.